Okay. So, good morning to all. So, can I can say officially today is the first class of financial accounting. So, before entering into this subject, just let me discuss few minutes about our paper. You all know total paper is divided into two parts. Part A is MCQs, part B is descriptive part. So you will have 15 MCQs, 15 into 2, 30 marks, and descriptive 70 marks. Out of 30, there is no choice in MCQ and no negative marking also, unlike your JEE advanced, such kind of things. No negative marking. This is the only area where CMA students can feel happy. 90% MCQs are easy. If you observe CA inter papers, they'll frame MCQs with case scenarios. They will give you one case study. Based upon that, they will design MCQs. But here, very happy, they'll ask you direct MCQ questions. Sometimes they'll draft a problem and they'll ask you the answer in MCQs. But for sure, if you compare CA inter with CMA inter, MCQs are damn easy when compared to CA inter. This is the only area where students can feel happy. I think you all know for every 5 to 6 years, CMA board, they will change the syllabus. In 2016, in 2012, I think every 4 years actually. In 2012, we have one syllabus. In 2016, they have completely modified the syllabus. Actually, 2020, they have to change the syllabus. But unfortunately, due to COVID pandemic, in 2022, they have modified the syllabus. So next syllabus will be changed in very soon. In 2027, June or December onwards, syllabus is going to be changed. Maybe in that syllabus, they may introduce or case study based MCQs. You are in safe zone, no problem. So for you, 2022 syllabus is applicable. I am giving clarity to all the students who are watching this class. All of you who are writing your exams in coming June or December 2026, for you 2022 syllabus is only applicable. New syllabus is applicable from 2027 onwards. Now some of you may get a doubt. Sir, if I am writing in December 2026, if I fail in that attempt, then what's the next? No problem. Even though if you fail in December attempt, unfortunately, no issue. Who has already registered in 2022 syllabus, they will give you at least 2 to 3 attempts. That means no need to think about revised syllabus. So whatever we are discussing, whatever I am giving material or classes, these are applicable for your attempt. Okay? Please don't believe any rumors. So your syllabus is syllabus 2022 only. As of now, there is no such kind of changes in our syllabus. Clear? Next one. In descriptive 70 marks, you have 2 questions as choice questions. Actually, each question carries 14 marks. Here each question means they will divide the question. For example, 2A7, 2B7. Out of entire 100 marks paper, one question is 14 marks question, remaining all are 7 marks questions or 4 or 5 marks questions. That means question number 2 to question number 8, every question for 14 marks. You can leave 2 questions as choice. That means your total paper is for 128 marks. Out of 128, 30 marks is MCQ. That means 98 marks is for descriptive part. Our pass mark is 40 marks. But if you look at overall or aggregate is need 50 marks, no? Then if our target is 50, so out of 30, you can get minimum 20 to 22 or 24, minimum score. I'm talking about an average student. Let me take minimum figure 20 only. If you score 20 in MCQ area, then you need only 30 marks out of 98 marks. That is damn easy, getting 30 out of 98. That is not a big deal. Very easily you can score that 30. In fact, 30 is not a big deal. Actually, you have to aim for 50 or 60. That is also easy. But unfortunately, many of your seniors and many students, they feel financial accounting is difficulty. Does this subject is really tough? If you ask me the question, my answer is undoubtedly no, a big no. Why? Because just lack of their strategy only they are feeling it is a difficulty, or else they are failing in it. The main problem is financial accounting has huge syllabus. We have n number of chapters. So here you have to take a beautiful strategy and you have to implement that strategy. Then only you will get qualified. So if you ask me, is it really tough? 100% my answer is no. If you really follow all my classes, and after my classes, if you follow my marathons and my MCQs and post coaching suggestions, whatever it is, definitely out of this 128 marks paper, getting 70 is not a big deal. Actually, 70 by 100 is not correct. 70 by 128. Paper is for 128. I'm asking only 70. That means you are ignoring 58 marks. So out of 128, getting 70 is not a big deal. So definitely, my teaching will be in that manner only. My target is to get 70 for each and every student who feels that he is an average student. If he is above average, or if he feels that I am good at, or else I'm topper of the batch, then you can expect 80 or 80 plus or 90. So my agenda or my focus is always on student who feels that I'm average student. So first of all, coming to this batch, I'm going to cover 100% syllabus. I'm not going to leave any single chapter, any single problem as well. I'm going to cover all the chapters. 100% syllabus I will cover. Already I told you, CMA examination asking pattern has been changed from December 2025 examinations onwards. It is completely changed. So definitely our coaching or preparation, we should change our mode of preparation. That's why my focus, rather than getting answers, rather again tallying balance sheet, rather than getting answers, my target is conceptual clarity. That is my main agenda of this batch. Of course, up to previous batches, my focus is always on examination oriented. What are the chapters to be focused, where student can get marks? That work out up to June 2025. But if you observe the recent papers, no, that is not going to work out. Definitely we have to change our style. We should get concept, otherwise we cannot survive in CMA. So next one, definitely I will go by category wise approach. Even though mode of asking is different, but they are asking from the same chapters. So that's why first I will cover all important category wise chapters. In first 1 to 1.5 months only, I will cover majority syllabus. That means which covers 70 to 80 marks. At end, I will cover all B category and C category chapters. And for me, all are same category, A, B, same category. But definitely we have to look at some chapters with highest importance. I'll tell you what are those chapters, all this. For example, if you want to clear your CMA inter financial accounting subject specially, we have n number of chapters. We have journal, ledger, subsidiary books, all those chapters. But here, please don't expect from me again need to explain journal entries and ledger accounting. I hope you know at least how to prepare ledger accounts, how to record journal entries. That is my basic assumption. Still, of course, whenever it is required, I will discuss those journal entries or ledger posting or trial balance or balance sheet. But here my main agenda is not on those basic fundamentals. My assumption is you all know it. In CMA Inter, those are not that much important. Out of your total CMA foundation syllabus, here few chapters are important. They are BRS, rectification of errors, capital and revenue transactions, and cash book. That's it. Bills of exchange, here we will discuss in detail because we have to discuss more. Okay. So, definitely to qualify CMA Inter or final, definitely you should analyze the total examination paper and syllabus. Without analyzing, you should not get a good score. As a student, that is not possible to you to analyze last 10 attempts question papers. On behalf of you, I verified previous 10 attempts question papers, previous 10 question papers. Out of those, I got my analysis. So, in entire syllabus, I have divided total syllabus into few category, A category, B category and C category chapters. So, these are my A category chapters. They are accounting standards, partnership accounts, single entry system and NPO, insurance claims, hire purchase system and lease accounting. These all are A category chapters in my point of view. How many chapters? 1, 2, 3, 4, 5. From these 5 chapters, you can expect almost approximately 70 to 80 marks. Of course, the range may change. Don't look at the numbers, look at the priority. Okay? So first let's focus on these chapters. After that, in B category, you have known some kind of chapters: bills of exchange, consignment, rectification of errors, BRS, depreciation, branch and departmental accounts. From this, 30 to 40 marks. And then remaining all are C category: joint venture, final accounts and basics, from where you can expect the remaining score. Again, I am telling you, all these syllabus is for 128 marks. Our target is only 70. Getting 70 out of this all chapters is not a bigger deal. First of all, accept mentally that you can get 70 easily. Just blindly follow our classes. Sir, what about material, sir? You are going to receive 2 kinds of material. One is a workbook, second one is a concept book. I am slightly modifying the workbook, but 90% same as previous book. But coming to concept book, I am completely redrafting entire concept book. I think it will take some time for giving concept book. But completely I am redrafting concept book. Once you received that book, no need to write notes as well. Everything will be in that notebook except solutions for the questions. Every concept, whatever I am covering here, I am covering in that concept book. Definitely it is going to be very good material for this batch. I am very much confident on this concept book. In workbook, I am slightly modifying a partnership accounts chapter and accounting standards chapter, where I feel changes are required. And slightly I am modifying, removing some questions from some chapters and adding some questions. Okay. So definitely by following our classes and our materials, so these are more than enough for getting 70 or 80. First of all, before entering into the syllabus, at least you should know the chapter names and which chapter has highest importance in our syllabus. Sir, From partnership accounting, same marks will come. I don't know, I'm not setting question paper. But approximately, if you look at the comparison, partnership has highest importance than branch accounts. Accounting standard says highest important than joint venture. So I'm just giving you clarity or prediction, priority, where you should focus more. But unfortunately, I cannot start partnership accounts at the first because it will take hardly 50 hours. I cannot start. I'll cover this chapter in mid of the batch. Normally, I'll cover this chapter at the end of the batch. This time, we'll discuss in mid of the batch only. Okay. Next one, accounting standards are very important, where you can get, and on average, you can get 24 marks. Partnership accounting on an average 20 to 22 marks. Single entry and NPO 16 marks. Insurance claims on an average 9 marks. Hire purchase and leasing 9. All these are basic average figures. 9, 18, 34, 54, 58, yeah, approximately 68. Don't look at the number, look at the priority. Don't believe these figures blindly. For your attempt, it may get changed. But if you compare the total paper, definitely from these areas where you can observe majority question paper. Okay. If you observe the entire category chapter, there I have not disclosed journal, ledger, cash book, subsidiary books, trial balance. These are not that much important here. Of course, they are needed for understanding the concept. So that's why I'm once again telling you to all the students who are watching this class. So by tomorrow, at least once, please revise all accounts of your CMA foundation. Just revise. Just have a look. Your faculty may dealt journal entries, ledger posting, all those things. Just revise it. Then it will be helpful to you in understanding in a better way of all the concepts. I hope you are clear. Then please open your new notebook. Just write this table. Don't write these marks. Just write A category chapters, B category chapters, and C category chapters. Write only chapter names. Please don't write the weightage. Done, sir. Tell me what is the total marks they are going to ask. 100 or 128? Out of 100 MCQs are for remaining 98 is from descriptive. Is there any choice in descriptive? That means 28 marks are choice. And coming to category, we have totally divided into A, B and C. In A category, how many chapters? Only 5. Actually, this separate chapter, you can say 6 chapters if you take it separately. What are those? Accounting standards, partnership accounting, single entry system, NPO, insurance claims, hire purchase system, lease accounting or leasing. In B category, you know bills of exchange, consignment, rectification of errors, BRS, depreciation, branch and departmental. C category, all the remaining areas, whatever. Okay. So we will start tomorrow new chapter from A category chapters. So the chapter is insurance claims. Very interesting and important chapter. Every time they are asking one question. Every time. Including in recent examination paper. Every time they are asking one question. So I will cover all the problems in insurance claims. First 10 classes I am going to upload in YouTube. After that I am not going to upload any classes on YouTube. That means all insurance claims complete chapter is going to be uploaded on YouTube. Then you will get clarity towards how I am going to teach your entire financial accounting subject. So believe me, my dear students, trust me and trust BCCA. Definitely financial accounting and all the subjects also going to be very, very easy. Especially coming to my subject. So just trust me, I am going to simplify the subject as max as possible. Okay. So just maintain consistency to all the classes and maintain better notebook for it. Once you got concept book, no need to write the concept as well. Everything will be in that book only, but you have to write answers for questions. Okay, yeah. So I'm giving you a task that by tomorrow at least check once all your foundation topics, especially journal entries and no, ledger is not required, especially journal entries and bad dates, provision for bad dates entries, all those. If time permits, have a look at trading account format, P&L account format, balance sheet format. That is enough. Okay, especially trading account, P&L account and balance sheet. If time permits, what is the meaning of gross profit ratio, because they are needed in insurance claims chapter. Okay, so if I told you already, even though if your CMA foundation marks are just 100 or 101, that means 150% of the marks only, that is not a problem here. It is completely different altogether. So pay attention and let's meet tomorrow with new chapter. From tomorrow onwards, so we'll start insurance claims. Some instructions to you from my side. Every student should have a beautiful rule notebook. That should be a new book. Second one, you should have good calculator, and if permits, maintain 2 pens. That is the only my requirements. Yeah. Thank you. We'll meet tomorrow. Bye. Okay. So in the last session, just we had a brief intro of the total our subject. So technically, this is the first chapter we are discussing in our CMA Inter paper number 6, financial accounting. I told you already, this is very, very, very important chapter, insurance claims. From this, every time they are asking one 7 marks question. Even in recent December 25 paper also, you can observe one 7 marks question from this chapter. So for any subject that may be financial accounting or costing or taxation or any other subject, if you are preparing any chapter, first of all, try to understand what is the need of that chapter, what is the necessity of chapter, what is the we are going to learn in this chapter. Without understanding those basic fundamentals, there is you cannot understand the entire concept is. Okay, Nandi? So coming to this insurance claims chapter, for example, before entering into the subject, all those things, let us discuss very in normal way. For example, you have qualified your CMA total final, including everything you have qualified. So now you are entering into one corporate sector. So you are earning some 10 lakhs or 12 lakhs per annum package. That is very good package. That means per month you are getting almost 1 lakh plus rupees. So definitely your family, that may be your husband or wife or maybe your parents, they are completely depends on your earnings, for sure. For example, take me as an example. So my family is depending on my earnings. Imagine if anything happens to me, definitely it will impact my entire family, for sure. Why? Because from next month onwards there is no earnings from me. They are depending on me. They cannot survive in this present scenario. Then that's why, that means there is a risk. What is the risk? If anything happens to me, my family will be in trouble. To overcome that risk, what I can do better? So everybody know what I can do. I can take an insurance policy. You have n number of insurance policies. LIC, Star Health, SBA, we have n number of insurance policies. What they are going to do, for example, if I pay every year 10,000 to an insurance company, if anything happens to me, they will give some 15-20 lakhs to my family. That means my family can at least survive up to 3 to 4 years after completion of particular event. So similarly, just for a person you are taking an insurance policy, if you take an business, In business, they will maintain stocks. Stocks means goods only. If you take any business, that may be Reliance, Tata or HUL, they will maintain lakhs of rupees goods in their godown, lakhs of rupees stocks in their godown. For example, this is the godown, these all are stocks. Stock means goods. For example, the stock value is some 10 lakh or 10 crore rupees. Imagine accident is happened, maybe short circuit. So every good is completely destroyed by fire. Then what is going to happen? It impact entire company. Company is going to be in trouble. That's why companies also, they will take an insurance policy. Insurance policy for whom? Insurance policy for these goods. If due to maybe fire accident or theft, if anything happens to those goods, then insurance company will give us a big amount. I think you all know insurance companies will give amount only if you pay premium to them. What is the meaning of premium? Every year we have to pay some amount to the insurance company. That's all you know. This is all related to my subject. These are the background of the subject. Our subject is, I will tell you later. First of all, have a look what is the need for this chapter. Business entities generally maintains a large volume of stock in its godown. If any fire accident or damage occur, it can significantly affect the entire organization. Sometimes it may lead to close of business. For example, I have started my own business. So with the amount of 10 lakh rupees, I purchased a full of stock. Unfortunately, everything is destroyed by fire accident. So there is no other option, I have to close my business. Now, what is the solution for it? To escape from this accident, company can take insurance policy. Now think in a company point of view, not in insurance company point of view. From this minute onwards, you are a company, so your goods are fully insured. You have taken an insurance policy on these goods, okay? Imagine these all are goods, fine? This goods value is 10 lakh rupees. Suddenly, fire accident has happened, every stock is completely destroyed. Now what is the benefit to you? What is the advantage to you? Definitely, insurance company will come to you, they will give a bulk amount to you. That amount is called claim. What is that? Claim. Claim means insurance company is giving to your business entity. Why they are giving claim? Because your goods are destroyed. So that's why our chapter name is insurance claims. Here insurance claims means insurance company is giving money to you. That means what happened? Already you have taken insurance policy, every good is completely destroyed. Now insurance company is coming to you, they are giving a claim. That claim is called insurance claim. Now the point is, sir, this stock value is 10 lakh rupees, sir. Every good is completely destroyed. Now tell me how much amount they will give to me. That is our present chapter. In this chapter, our target is to calculate insurance claim. Nothing but to calculate how much amount is receivable from insurance company. That is our target. How to do accounting for insurance claim, how to calculate that claim, that this chapter will explain everything. So background of this chapter is this. Because there is a risk of fire accident, we will take an insurance policy. What is the present chapter purpose? In this chapter we are going to learn how to calculate insurance claim and how to do accounting for this insurance claim. Are you getting my point? Till now I have not started any chapter. This is all basic background of the chapter. Please do copy somewhere. Clear up to here? So up to here we have not started any discussion in this chapter. Just we spoke about the background of the chapter. If you want to tell me in single line, so definitely whenever company is maintaining lakhs of rupees stock, there is a risk of fire accident or theft. To overcome that risk, companies can take an insurance policy. If any fire accident happened or occurred, in that case, we will receive a bulk amount from insurance company. That amount is called claim. That claim is called insurance claim. Sir, how much amount I will receive, sir? Or how to do accounting for? All this we'll discuss in this chapter. That is the main agenda of this chapter. Now listen very, very, very carefully. So after studying this chapter, so you will able to understand this point. First one, what is the meaning of loss of stock and loss of profit we will learn. Second one, under insurance. Third one, average class. Fourth one, calculation of insurance claims. All these points we will learn in this chapter after completion of this chapter. Okay. Now don't write anything. Please pay more attention. Everybody. So concept number 1, loss of stock. Concept number 2, loss of profit. Concept number 3, abnormal loss of goods. In this chapter, so we are going to cover only 3 concepts. What are those? Loss of stock, loss of profit, abnormal loss of goods. Let me discuss one by one. Okay? Yeah. Listen. What is the first concept? Loss of stock. The name is trying to tell something. Loss of stock means what? Goods are completely destroyed. In this chapter, remember, I will discuss only about fire accident. That means already we have taken insurance policy. My goods are destroyed. That is example for all the concepts. Okay. Now see what to do. So in loss of stock, you tell me. So already I have taken an insurance policy from so and so company. My goods is destroyed. Then what is our objective? Is to calculate how much amount is receivable from insurance. That is called what? Insurance. That means as a CMA student, your target is to calculate how much insurance claim. For example, you are the CEO of Reliance company or accountant or CFO of Reliance company. So that company has taken insurance policy. Unfortunately, all goods are destroyed. Now Mukesh Ambani is calling you to calculate insurance claim. What is the meaning of insurance claim? Insurance claims means how much is receivable from insurance company. Now that is our biggest task in this chapter. What is that? Calculation of insurance claims. For example, you tell me with your common sense. For example, this goods value is 10 lakh rupees. Okay. We have taken insurance policy for 10 lakh rupees. Imagine every bench completely destroyed. Nothing is here. Tell me how much amount we will receive? 10 lakh rupees. Example number 2. Out of 10 lakh rupees, only 8 lakhs are destroyed. How much we will receive? 8 lakh rupees. Super. Imagine, for example, you are accountant of some Reliance company or DMart company. In that company, fire accident is on 31st March 2026. That means is on balance sheet date. In my example, I am telling you value is 10 lakhs. But in DMart, you don't know what is the stock as on that date. Are you getting my point? So what is the fire accident date? 31st March 20. Every stock completely destroyed. Now the point is, you don't know how much stock as on that date in that godown. Then your biggest task is now to tell them what is the stock on date of fire. Stock on date of fire means on that particular accident date, what is the amount of stock in our godown. That is our biggest task. Because this is my example, I am telling you 10 lakhs goods is here. But in your question, they will not tell you 10 lakhs rupees goods is there. You have to find out what is the stock on date of fire. That means as on that date, what is the value of our goods in our godown. That means to calculate insurance claim, we need to calculate what? Stock on date of fire. Stock on date of fire means on the date of fire, what is the value of stock? That is very, very important. So try to understand conceptually. So what is our main agenda? Calculation of insurance claims. But to calculate insurance claims, what we have to find out? Stock on date of fire. Why we should find out stock on date of fire? Based upon it, they will give you amount. See, for example, my stock is only 1 lakh. They will give 1 lakh rupees only. That means I have to tell them what is my stock value. 1 lakh. But in your main exam, they will not tell you amount just like me. You have to find it out. Where can you find out your closing stock? In two places. One is trading account in credit side by closing stock. Second one is in your balance sheet asset side closing stock. That means if date of fire is 31st March 26, everybody can say what is stock on date of fire, either maybe in trading account or in balance sheet. Because in trading account we can identify closing stock in credit side, in balance sheet and under asset side. Everybody can tell it. Because every one of you know in your foundation level, closing stock we can identify in trading account and balance sheet. But the problem is, if date of fire is some other date, for example, it is August 15th, then how can you tell me stock on date of fire? That is the important thing in this chapter. That means if accident is on balance sheet date, our job is very easy. I'll open my books of accounts, I'll open my trading account, balance sheet, closing stock is 10 lakhs, give me 10 lakhs, I can ask 10 lakhs. But the problem is, if date of fire is some other date, it is other than balance sheet date, in that case, you have to find out stock on date of fire. On it, you can ask insurance claim from insurance company. That is the biggest task of what you call business entity. Are you getting my point? If date of fire is 31st March, our task is very easy. How can you tell them stock on date of fire? Just by opening trading account or P&L account. Trading account or balance sheet. But the problem is, if the date of fire is other than balance sheet date, then how can you find out or how can you tell them stock on date of fire? That is the task of the business entity. Are you getting it, sir? So try to understand, everything is interlinked. So let me recap from the beginning. Normally, business entities maintain lakhs of rupees stock. Definitely, there is a risk that it may be destroyed by fire or theft. So to overcome that risk, what they can do? They can take an insurance policy. If they have taken insurance policy, unfortunately, fire accident occurred. Then what is going to happen? Then we will receive amount from the insurance company. That amount is called what? Insurance claim. How much is receivable and how to record journal entries, that is the agenda of this chapter. This chapter will explain accounting for insurance claims and calculation of insurance claims. In our chapter, mainly we have three concepts. Concept number 1, loss of stock. Concept number 2, loss of profit. Concept number 3, abnormal loss of goods. Under loss of stock, what is the meaning of that concept? Fire accident occurred, every stock is destroyed. Now our agenda is to calculate what is the claim receivable from insurance company. To find out the insurance claim, what is the important thing? We need to calculate stock on date of fire. Try to understand why this is important. For example, you are the business entity, I am insurance company. So fire accident occurred. Then I will come to your business. First of all, what I will ask? First thing I will ask you to, what happened? You told me, sir, fire accident happened. tell me what is the value of destroyed. And then what you have to say, you have to tell me your stock on date of fire. For example, in your go down yesterday night, your valuation is 10 lakh rupees. Then you have to say, sir, 10 lakh rupees, sir. That means this is very, very important for insurance claims. What is that? Stock on date of fire. But insurance company will not believe words of mouth. He will believe your books of accounts and financial statements. For example, if you say 1 crore, I cannot give 1 crore directly to you. I need proof. I need evidence. What is the evidence? Your books of accounts. For example, if the fire is on 31st March, the proof is what? Your balance sheet or your trading account. That is the proof. But the problem is, if that date of fire is other than 31st March, then how to calculate our insurance claim, how to calculate stock on date of fire is the task of students. So that is our main agenda in this chapter. What is the main agenda? Calculation of stock on date of fire, calculation of insurance claim. To calculate insurance claim, we need to calculate stock on date of fire. If that is as on balance sheet date, we can identify it either in trading account or in balance sheet. But 100% it is other than balance sheet date only. We have to find it out. I will tell you later how to find out, how to get marks, everything. But try to understand what we are going to discuss. Try to understand basic or background of the chapter. So for getting marks, all this is not important. So we can directly go to the questions and answers. But that is not correct in my book. So let's understand the concept and background. Okay. So you understood this concept. What is the concept name? Loss of stock. So our agenda is to calculate what? Insurance claim. For it we need what? Stock on date of. Imagine if that is this date, then how can we find out? By using a trading account, or if it is other than this, we cannot. We have to do some calculation. I will discuss it later. So first to do this, copy it. సార్ ఇది నోట్ చేసుకున్నారండి? యా, నో ఇష్యూ, నో ప్రాబ్లం. So now tell me, what do you understood? If the fire accident happened, what is your task? You have to calculate stock on date of fire. Why should I calculate that? Based upon it, you can tell what is insurance claim amount. If it is on balance sheet date, how can I find out stock on date of fire? By opening trading account or balance sheet. If that is other than balance sheet date, we will discuss now how to find out that stock on date of fire. Normally, you know, this is the trading account format. I think you know it. What is trading account? Opening stock, purchases, and all direct expense, credit side, sales, closing stock. So this is a new item, I think, to you. What is this? Goods lost in, that is also comes under credit side. If you close it, you will get what? Either gross profit or else gross loss. What is the formula for gross profit ratio? Gross profit by sales into 100. I think you know this format in your foundation level only, so I'm not again discussing this format. Okay, so this format will help you out to finding stock on date of fire. Sir, how it will help, we'll discuss later. First of all, copy up to this concept. Done up to here? Then draw this format. Okay. So tell me, what is our chapter name? Insurance claims. So in this chapter, how many concepts we are going to discuss? Only 3. What are those 3? Loss of stock, loss of profit, abnormal goods. Abnormal loss of goods. So first one, in loss of stock, what is the meaning of loss of stock? If you, for example, if your friend is asking, what is loss of stock, what you will say? Loss of stock means, in our godown we have stock, so due to fire accident everything is destroyed. That is called loss of stock. So in this chapter, why we are finding loss of stock? To calculate insurance claim. What is the meaning of insurance claim? Insurance claims means, if any fire accident happen, if your goods are destroyed, insurance company will give an amount. That amount is called insurance claim. What is your duty? Your duty is to find out how much insurance claim. To tell them how much insurance claim, what you have to tell them? You have to find out stock on date of fire. Stock on date of fire means what? What is your stock value as on that date? On which date? On date of fire. For example, if date of fire is on 31st March, then we can tell them stock on date of fire within a fraction of seconds. That means by opening either trading account or else balance sheet. But when the problem will arise, the problem is if the date of fire is other than balance sheet date. Normally, date of fire will not comes only on balance sheet date. It may comes any date, no? In that case, what is the procedure to find out stock on date of fire? So we'll discuss in this chapter. So for that, this is the only account will help you out. What is that account? Trading account. It will help you out to find out stock on date of fire. From this we will find out insurance claim. Remember, in this chapter our main agenda is to calculate insurance claim only. It's depend upon your stock on date of fire. How to calculate? By using this trading account. What is trading account format? 2 opening stock, 2 purchases, 2 wages, to all direct expenses. Credit side, sales, goods lost in transit, closing stock. The balancing figure is gross profit or gross loss. You know in your foundation formula for gross profit ratio. What is formula? Gross profit by sales into 100. This is enough for today. So tomorrow we'll move into the problematic part. Very, very interesting this chapter. Very, very interesting, believe me. Okay. Tomorrow onwards we'll enter the problematic area. Bye. Okay. So in last session we have started insurance claims. So the main focus in the last class is completely on background of the chapter. So what is the main purpose of insurance claims chapter? So whenever companies maintain lakhs of rupees stock, definitely there is a risk. What is that risk? Fire accident. So to cover that risk, they'll take an insurance policies. So here the main point of the chapter is, we are a business entity. We have taken an insurance policy also. So unfortunately, due to fire accident, all the stock is completely destroyed. Now what is going to happen? Company, nothing but insurance company will give you money. That money is called insurance claim. So in this chapter, our main target is calculation of insurance claim. That means how much we will receive from insurance company. So we have totally how many concepts in this chapter? 3 concepts. Concept number 1, loss of stock. Concept number 2, loss of profit. Concept number 3, abnormal loss of goods. So we have discussing loss of stock. So in this concept, what we discussed? So already goods are destroyed. Okay. Now what is our main agenda? Calculation of insurance. Insurance claims means what? How much amount is receivable from insurance company. Imagine we are that business entity. All these are goods. So we have taken insurance policy for it. So now everything is destroyed. Now we will receive money from company. How much? That is our main agenda. So for that, what is the needed? Stock on date of fire. How to calculate stock on date of fire, sir? What is the meaning of stock on date of fire? That means on that accident race, on that accident date, what is the value of stock? For example, date of fire is 31st March. What is 31st March? Balance sheet date. Normally, every company will prepare balance sheet on 31st March generally. So, on the date we need what is the stock. Normally, where can we find out closing stock? Either we can find out in trading account or we can find out in balance sheet. In trading account, on which side? Credit side we can write buy closing stock, or in the balance sheet asset side closing stock. No sir, fire accident is not on 31st March. In that case, then how to find out stock on date of fire? Without calculation of stock on date of fire, you cannot find out insurance claim. So in this chapter, the important word is stock on date of fire. So the second part, listen very carefully. I think you remember the trading account format. What is trading account format? Debit side, opening stock, purchases less returns, wages, carriage inward, all direct expenses. Direct expenses means, for example, factory rent or factory lighting, whatever directly involved in production, they are called direct expenses. Credit side, sales minus returns means sales returns, here purchase returns, by goods lost in transit, by closing stock. You will get a gross profit, otherwise gross loss. So what is the formula for gross profit ratio? Gross profit by sales into 100. So this is the discussion of last class. Okay. Now, apart from subject, let me discuss a general example. For example, this product cost is 100 rupees. Cost means I manufactured it. So for me, the cost is 100 rupees. Okay. Cost is 100 rupees. I am selling this water bottle in a market for 150 rupees. This is called selling price. Cost is 100, selling price is 150. Tell me what is the profit on this water bottle. So water bottle profit is 50 rupees. Nice. Tell me same profit, tell me in ratio. We can call it as a gross profit, no problem. Then ratio, gross profit ratio. What is the formula for gross profit ratio? Gross profit by sales into, switch on your calcium, do it. How much? 33.333%. That means if you are taking gross profit on sales, what is the ratio? 33.33333%. Now observe. Now I am taking gross profit by cost into 100. What is the cost? 100. My dear students, look at the screen and tell me what is the difference between these two calculations. The first calculation is gross profit by selling price into 100. Second calculation is gross profit by cost into this 33.333% is called gross profit on sales. This 50% is called gross profit on cost. For example, if in your main exam they are giving these two, they'll give you these two. For example, so they are giving these two figures and these two figures. They are asking gross profit. Very easy. Gross profit equals to, what is the percentage? On sales or cost. That means 150 into 33.333. Do it. In your calc, do it. 150 into 33.3333 percentage. How much? Nothing but 50 rupees only, no? That is the gross profit. No, sir, I want to apply this percentage, sir. You have to apply on what? Apply on cost. And then gross profit equals to 100 into 50%. How much? Here also again same gross profit. So observe the screen. I'll repeat that example once again. So cost of my water bottle is how much? 100 rupees. What is my sales value? 150. Because that is very small calculation, you can say directly gross profit equals to 50 rupees. Let's convert into ratio. Nothing but GP ratio on sales. Nothing but gross profit by sales into 100. What is gross profit? 50. Sales value 150 into 100 equals to 33.3333%. No, sir, I need on cost. Gross profit on cost equals to gross profit by cost into 100. What is gross profit? 50 by 100 into 100 equals to 50%. In your main exam, for example, they are giving you cost and selling price and they are giving this percentage. They are asking gross profit. So you have to apply this percentage on sales. That means 150 into 33.33%. You will get a 50 rupees. Check it out. If they give this percentage, apply it on selling price. That means 100 into 50%, 50 rupees. Are you getting my point? Now listen. Then you tell me. For example, cost is 200 rupees. Selling price is 300 rupees. So I am telling you gross profit or profit on sales is 20%. I need gross profit. Tell me what is the gross profit in this scenario? Percentage is one. Cost of sales. Applied on sales. What is sales value? Into 20%. That's it. Are you getting my point? Cost 500. Sale value is 600. They are telling us gross profit on cost 10%. Tell me gross profit. What is that? Very simple. On cost applied. 500 into 10%. 50 rupees. Okay. Example number 3. Cost equals to 500 rupees. They are not giving you selling value. They are directly giving you gross profit on sales they are giving. Try to do it. I need gross profit. Yeah, use pen and paper. This is not an accounting, that is mathematics in your school level. Online people also, give me your answer in comment section. I'm giving you 1 minute. $120. Correct, sir. Actually, there is shortcut for it. So this is a shortcut. So if it is on cost 50%, nothing but on sales it will become 33.333%. If it is on cost 33.33, on sales 25, on cost 25, on sales 20. You have to remember all these ratios. GP on cost 50 is equals to GP on sales 33.33. If it is on cost 33.33, on sales 25. If it is 25, it is 20. You have to remember this. That means you have to directly apply GP equals to 500 into on sales 20. We need on cost. What is on cost figure? 25. Apply 25% directly. 500 into 25%. 125. Clear up to here. So my main agenda is to convey these 3 ratios. So you have to remember these ratios. On cost 50 is equals to on sales 33.33. 33.33, 25, 25, 20. Okay? Yeah. Please copy this. Okay, listen, highlight of this session would be this problem. So we are going to cover this problem. So listen very carefully. If you understood this problem, so our purpose of this class is fulfilled. So you don't do anything, don't write anything, just listen, that's it. So there is example on your screen. Stock as on 1/4/2024 10 lakh rupees. What is the meaning of stock? Goods only, our stock. What is the value? 10 lakh rupees. What is the date of stock is 1/4/2024. Next one, purchases in 24/25. How much? 50 lakh rupees. Next one, wages in 24/25 is 5 lakh rupees. Carries inward 5 lakh rupees. Sales 8 lakh rupees. Closing stock 60 lakh rupees. Unfortunately, there is fire accident when it is on the day of August 15th. So this is important for us. What is that? Date of fire. What is the date of fire? 15th August 2025. So ignore about how much insurance company will give amount. Tell me, for example, I am agent of insurance company. If I come to you, the first question what I will ask you to tell me what is the stock on yesterday night. That's what I will ask you. If that accident is on 31st March, you will say, sir, this is our stock value, sir, 60 lakhs, sir. Where is the proof? You will show me your trading account, your balance sheet, then I will believe, I will give you money and I will go. But the problem is, fire accident is on August 15th. If I ask you, you will say, sir, 2 crores or 3 crores, sir. I cannot believe your words. I need evidence. I'll ask you your trading account, your balance sheet. But when we will prepare trading and balance sheet? At year end, accident is year mid. Now, your biggest task is to calculate what is the stock on date of that fire accident. Nothing but you have to tell me what is the stock on 15th August 2025. So you don't worry, they will give you extra data. Extra data means from current year beginning to date of fire accident. They are telling you purchases from 1/4/2025 to 15th August 2025. That means in current year up to fire accident date, again I purchased some goods. Those goods value is 2 lakh rupees. Purchase returns also there in that period 10,000 rupees. Sales in that period 4 lakh rupees. Sales returns in that period 5,000 rupees. Wages in that period 20,000 rupees. That means for me, this information is not important when compared to this information. This is the most important for me because I need to calculate stock on 15th August 2025. So this data is related to last year. So but I need to find out closing stock on 15th August 2025. So already I told you, for finding out stock on date of fire, the one and only option we have is preparation of trading account. Normally, when we will prepare trading account at year end, but in this problem, we are going to prepare trading account on 15th August 2025 only. Why you are preparing it? For finding out closing stock, nothing but stock as on this date. Listen very carefully. So let me prepare trading account. Tell me what is the format of trading account. First of all, this trading account is from 1/4/2025 to 31st August 2025. Do you understood these dates? Why? Because this is current year beginning to accident date. So year is not yet completed. Still I am preparing for finding out stock here. Okay? You tell me what is the format of trading account to opening stock. Opening stock means what? Stock on 1/4/2020. Anybody in the class tell me here how much should I record? Here, how much should I record? Hmm? 10 lakhs is 1 for 2024 opening stock. That is the previous year opening stock. I need on 1 for 2025. Nothing but 60 lakhs only. Last year closing is nothing but current year opening only, no? That means my opening stock is 60 lakhs. Next what? 2 purchases minus purchase returns. Purchases means we have to take this figure, not this figure. Purchases 2 lakhs minus purchase returns. That means how much? 1,90,000. Super. What else? Wages. 2 wages. 20,000. What else? Carriage inward is there, huh? No, carriage inward is in the previous year. In current year, no carriage inwards. Okay, look at the only current year data. In current year purchase, sales is pending. Sales 4 lakhs, returns 5,000. Nothing but buy sales minus sales returns. 3 lakh. So everything is recorded in current year. We have recorded current year opening stock, purchases, sales, wages, everything is done. So, no more other expenses, unfortunately. If you close this account, definitely one side to gross profit, another side by closing stock. By closing stock is nothing but what? This is stock on date of fire. So normally we cannot close this account because both sides there are a balancing figure. If you know this, you can find out this, or vice versa. But unfortunately, in that question I have not given gross profit ratio. Our target is to find out this. If we have gross profit, then balancing figure is our answer. Unfortunately, we don't have any information about gross profit. Are you getting my point? If you get it, this is very easy. Imagine, for example sake, this is some 30,000. Then what is the answer? Do it on your calci. 60 lakh plus 1 lakh 90 plus 20 plus 30 minus 3 lakh 90. Balancing figure. Add all it and reduce it. That is the answer. If it is 40,000, but we don't know this figure. We don't know what is the gross profit. They have not given gross profit ratio percentage. Are you getting my point? In that case, we have to take one assumption. The assumption is, so current year gross profit ratio is equals to last year gross profit ratio. That means I need last year gross profit ratio. I will apply here. This is the answer then. That means I need to find out last year gross profit ratio. How to find out gross profit ratio? Gross profit by sales into 100. Which year gross profit? Last year gross profit. For finding out last year gross profit, what I need to do? I need to prepare last year trading account. Then I will find out last year gross profit. Okay? Don't look at it as a problem and answer. Look at it as a procedure. Just understand what I am doing. Don't thinking about lengthy or answer. Ignore. Just be calm and listen. That's it. Now my target is to prepare last year trading account. Why? To find out last year gross profit. Again I am preparing one more trading account. This account is for 24-25 last year. To opening stock. What is last year opening stock? What is 10 lakhs? Next one, purchases minus purchase returns. Purchases returns are 0, no? Then 50 lakhs. Next one, wages. Wages how much? 5 lakhs. Look at only last year data. Any other expenses? 2 carriers inwards. How much? 5 lakhs. Next one, sales minus sales returns. Sales how much? 8 lakhs. Sales return 0. Next one, closing stock how much? 60 lakhs. Yeah, do it. Find out gross profit or gross loss. So on your calc, you do it. Add it and reduce it. 8 lakh plus 60 lakh minus 10 lakh minus 50 lakh minus 5 lakh minus 5 lakh. Gross profit or gross loss? Profit or loss? Tell me, yaar. Loss? Which side is more? 10, 60, 65, 70, 140. Gross profit only, no? 68. Make it 18 then. Then tell me. Two gross profit. Balancing figure. Total 78 lakhs. Still it is more, no? What is gross profit? 8 lakhs. Okay. Now from this, let's find out gross profit ratio. What is formula for a gross profit ratio? Gross profit by sales into 100. What is gross profit in this question? 8 lakh. By sales how much? 18 lakhs. Into 100. 44.44%. So this is what gross profit ratio of last year. Let me apply this ratio in current year. Nothing but this ratio on sales or cost. On sales only, no. What is current year sales? Into 44.444%. 1,75,550. Close it, then you will get the answer. Do it on your calci. Remaining balancing figure is your stock on date of fire. Sorry, 59 lakh 90,000 5, whatever it is, 6 4. So this total 63 lakhs. Understood, sir? So what happened? So they have given last year data and current year data, date of fire. So for me, current year data is important actually to find out current year closing stock. Current year closing stock is nothing but current year stock on date of fire. So I have written opening stock, purchases, wages, sales. Unfortunately, I don't know gross profit. I don't know closing stock. To find out gross profit, what is my assumption? So I am assuming as current year GP ratio is same as last year GP ratio. That's why I find out last year GP. How to find out last year GP? By preparing last year trading account. Then I got last year gross profit. I found out last year GP ratio. How to find out gross profit by sales into 100. Then I got 44.444 percentage. I apply this percentage in current year. I got current year gross profit. Now the balancing figure is our required stock on date of fire. That's it. Clear up to here. So tell me what is step number 1? Preparation of current year trading account. Unfortunately, you will not get the answer. Why? Because you don't have gross profit, you don't have stock on date of fire. So for that you need gross profit ratio of last year. Then we need to find out gross profit of last year. For that we need to prepare trading account of last year. And we got last year gross profit. Then find out last year gross profit ratio. Apply in current year trading account. Then the rest will be the answer, nothing but your stock on date of fire. Clear, sir? So don't focus on numbers, focus on procedure and understand what I am doing, how I am finding out gross profit, how I am finding out all these things. Even though if you are unable to understand the problem and answer, at least try to understand what is trading account, where I am writing which items. Okay, you will get clarity class by class, class by class. Yeah, please do copy it. Yeah, we have to change one number, right? What is the number I have to change? What is that? Yeah. Tell me what to do for finding stock on date of fire. First we have to prepare current year trading account. Current year trading account means 1/4/2025 to 31st August 25. Do it, come on quick. So once you prepare this trading account, we cannot find out stock on date of fire. Why? Because we don't have current year gross profit. To find out current year gross profit, we need gross profit ratio. So we have to take an assumption that last year GP ratio is current year GP ratio. Then we need to find out last year gross profit. Done. I think you got it. So we can close the session. Okay. So let me recap the first class of insurance claims. So you all know background of insurance claims. Definitely for any business, maintaining stock is very, very risky. What is that risky event? There may be fire accident first of all. Some businesses, they'll maintain lot of stock in their godowns. If any fire accident occurred, every stock will be destroyed. If stock is destroyed, what is the consequences? Sometimes they may close their business. If you observe, in COVID pandemic, a number of companies closed completely. Why? Because they are depending completely on their normal sales. Because no sales, they are unable to pay their fixed cost, rent, interest, everything. That's why they have closed. So some businesses, they'll completely depend upon their stock. In that case, there may be chance of fire accident. So to overcome that risk, what they can do maximum, they can take an insurance policy. For example, all these are goods, amount of 1 crore rupees. Definitely, if I am maintaining 1 crore rupees in this go down, how can I sleep? Always in my mind, there is what you call, there is a fear of fire accident. That may be accident or intentionally by some of my competitors. If anything happens to this 1 crore rupees stock, then whole of my business and my life will become zero. That is the problem. So to overcome this problem, so we have one solution. Just I will approach one insurance company. Imagine that is SBI insurance or some other insurance company. I will go to that company, I will talk to them. My dear insurance company, I have 1 crore rupees stock in my godown. But I have a fear of fire accident. So please insure my goods. If anything happens to my goods, you have to give me money. Then what is the benefit to the insurance company? You don't worry. Every year I will pay premium. If anything happened, they will give you a big amount. Imagine they will give you 1 crore rupees. That 1 crore is called what? Claim. Even in your families also, your parents or your relatives, they may take an LIC policies. Every year your parents has to pay premium to the company. If anything happens to that person, they will give you a big amount. That amount is called claim. So in this chapter, my topic is not about life insurance. My topic is about general insurance. Nothing but only about goods. I am taking policy on my goods, not on persons, not on machineries or vehicles. If I am taking policy on this 1 crore rupees goods, imagine something happened, fire accident, unfortunately, then how much should insurance company give to us? That amount is called insurance claims. Our biggest task in this chapter is to finding out insurance claim. Insurance claims means what? This is the amount which is payable by the insurance company to the our business. Why they have to pay? Because we insured our goods and fire accident has occurred, everything is destroyed completely. Sir, how much they will give? They will give 1 crore or less than 1 crore or more than 1 crore. How much exactly they will give? That's what our task is. We have to find out how much claim they will give to our business entity. For example, imagine you are the CEO of some SBI insurance company. Okay? And I am XYZ Limited company. You are insurance company. In my go down, we have 10 lakh rupees stock and we have taken insurance policy with you. Unfortunately, complete stock is destroyed. Every year I am paying premium to you. Tell me, how much amount will you give to me? 15 lakhs or 20 lakhs? 10 lakhs only. Case 2, out of 10 lakh rupees goods, only 6 lakh rupees goods are destroyed. In that case, how much will you give to me? Only 6 lakhs. Imagine. Case 3, in my go down, we have 10 lakh rupees goods. Okay. But I have taken insurance policy only for 6 lakh rupees. Remember carefully, goods value is 10 lakhs. Policy value is 6 lakhs only. If destroyed, how much you will give to me? 6 lakhs or 10 lakhs? 6 lakh. Case 4. In my go down, 10 lakh stock is there. Policy value 6 lakhs. But due to fire accident, out of this 10 lakhs, only 4 lakhs goods are destroyed. For all these questions, this chapter will give you the answers. Okay? Different dimensions, different cases. So our main objective in this chapter is to finding out insurance claim. That means how much amount is receivable from insurance company to our business entity. You tell me, for example, in my go down, I am holding 50 lakhs rupees stock. My insurance policy is 80 lakhs. How much you will give to me? 50 lakhs obviously. Okay, no? Yeah. Now, use your CMA foundation accounts knowledge and use this insurance claims knowledge as well. For example, you are insurance company CEO. I am ABC Limited company. I have taken insurance policy from you. Policy value is 1 crore. In my go down, some stock is there. I am not telling you stock amount. Unfortunately, on 31st March 2025, a big fire accident occurred. Every stock is destroyed. Now tell me, how much insurance company will give to us? You will give 1 crore rupees to me? No. They'll ask you to tell me how much stock destroyed. That means we should know what is the value of stock on this date. On which date? On date of fire accident. That means you have to find out stock on date of fire. In shortcut, I have to call it as a SODF, stock on date of fire. So this plays important role in finding out insurance claim. Are you getting my point? So then you tell me, because this is 31st March 2025, how can you find out stock on this date? By opening trading account or balance sheet. You know, in your CMA foundation, where can you find out closing stock? In trading account, by closing stock. In balance sheet, under current assets stock. There you can find it out what is the stock value as on that date. Are you getting my point? If you open your balance sheet, for example, that balance sheet shows our stock value is only 60 lakhs, then you will get only 60 lakh rupees. Are you getting my point? That means in this chapter, calculation of SODF is very, very important. SODF means stock on date of fire. On that only we will find out insurance claim. This is all background of the chapter. So that means our important thing in this chapter is finding out stock on date of fire. Actually, if you want me to bifurcate the chapter into concepts, we have 3 concepts. Concept number 1 is loss of stock. Concept number 2, loss of profit. Concept number 3, abnormal loss of goods. The first concept is loss of stock. That means we have taken insurance policy, every stock is destroyed, and that is called loss of stock. Your task is to find out how much insurance claim is. That's what I have written here. Our objective is to calculate how much receivable from insurance company. We need to calculate what? We need to calculate stock on date of fire. You tell me, normally closing stock మనం ఎలా ఫైండ్ చేయొచ్చు in the normal sense, either trading account or balance sheet. If the date of fire is some other date, that is 15th August, in that case you cannot open your balance sheet or trading account. Why? Because we will prepare those balance sheet is on 31st March. Fire accident is on 15th August. I need stock on this date. I cannot open trading account. I cannot open balance sheet. They are not available with me on this date. As a CMA, you have to find out what is stock on this August 15th, 2026 date. That is your responsibility. Then how to find out, sir? You have only one option. You have to open trading account. Sir, can I open balance sheet? No. Balance sheet should be as on last date, 31st March. You can open trading account. Trading account from year beginning to this date. This date means date of fire. So I have, you know the trading account format normally. What is trading account format? Opening stock, purchases minus returns, wages. What are the remaining expenses? Direct expenses means freight, power and fuel, coal, carriage inward, factory expenses, factory lighting, all are called direct. Credit side, sales minus return by goods lost in transit by closing. You will get what? Gross profit. So we need to find out this stock. This stock is called stock on date of fire. You all know formula for GP ratio. What is the formula for GP ratio? Gross profit by sales into. In your foundation, you have this kind of techniques. Gross profit on cost 50, on sales how much? 33.33. On cost 33.33, on sales 25. If it is 25 on cost, on sales 20%. If you have less than last class, no problem. I will again explain this entire problem in detail. Listen very, very carefully. Let's take too much of time in introduction classes. Once everything is set, then I'll increase the speed. You don't worry. I'll complete the syllabus as soon as possible. If time permits, I'll complete the syllabus as soon as possible. Yeah. Look at the example. So they have given some data. Stock as on 1/4/2024 10 lakh rupees, purchases 50 lakhs, wages 5 lakhs, carriage inward 5 lakh, sales 18 lakhs, closing stock 60 lakhs. Some extra data is there. Date of fire is on 15th August 20. What is the requirement of the question? Stock on date of fire. What should I do? Trading account I have to open. Very easy. Listen very, very carefully. Trading account for the current year. Current year means what is the current year opening date? Current year opening date is 1/4/25 to 15th August. Okay, 15th August 2025. Yeah, everybody observe. So what is the format of trading account? Two opening stock. What is the opening stock amount? Is this the opening stock? No. Opening stock is 60 lakhs. So that is closing stock, no? Last year closing, current year opening stock. So two opening stock 60 lakhs. Next. Only look at current year info. Purchases how much? 2 lakhs. Purchase returns? That means 2 purchases 1 lakh 90,000. Any direct expenses? Wages are there. 2 wages. 2 wages how much? 20,000. Any other direct expenses? Carriage inward, factory expenses in current year? No. Other side, sales and sales return. Sales how much? 4 lakh. Sales return 5,000. Buy sales 3 lakh. Any goods lost in transit? Then buy closing stock. Actually, this is not closing stock. This is the stock on date of fire. We have to find out this. How can I find out it? Actually, this is the balancing figure. We don't know gross profit. We don't know stock on date of fire. So if they have given gross profit ratio, for example, if they are giving a gross profit ratio is 20% on sales, then into 20% is gross profit. The balancing figure is closing stock. But they have not given gross profit ratio of current year. Then what shall I do now? I have to find out gross profit ratio. What is the formula for a gross profit ratio? Gross profit ratio equals to gross profit by sales into what is gross profit that I don't know. In that case, I have to take one assumption. That assumption is last year gross profit is current year gross profit. What is last year gross profit? That also I don't know. To find out gross profit, I have to open last year trading account. By the trading account, I can find out last year gross profit. So you tell me, we have to open one more trading account, that is trading account of last year. Please help me out. Let's prepare trading account. To opening stock. How much opening stock of last year? 10 lakh rupees. Two purchases, 50 lakhs. Any returns are there? No. Two purchases, 50 lakhs. 50. Next one. Two wages, 5 lakhs. Next one. Two carriers inward, 5 lakhs. Next one. Buy sales, 18 lakhs. Buy closing stock, 60 lakhs. What is the balancing figure? Gross profit, 78 lakhs is the Amma? Only 8 lakhs. Yeah, 8 lakhs is the gross profit. But I need gross profit ratio. How can I find out gross profit ratio? Gross profit by sales how much? Into 100. 44.44. That is last year GP ratio. I will take this current year. Now current year gross profit how much? Current year sales into gross profit ratio. How much? 1 lakh? 5? 56. Okay. Remaining is the answer. 59 lakhs? 90,000? That is stock on date of fire. Clear? So to find out it, I have opened current year trading account. Unfortunately, I don't have gross profit. To find out this, I need GP ratio. Because they have not given in the question, I assumed it as last year ratio is current year ratio. So I need last year GP. For that I have opened last year trading account. Then I got last year gross profit. Then I found out last year GP ratio. So I found out current year GP, then the balance is stock on date of fire. One small additional point to you guys. Actually, final accounts means we have to prepare at the end of year. But we are preparing this account on August 15th. That is not at all fair. You should not call it as a trading account. You should call it as a memorandum trading. Memorandum means that is not final. What is this is called? Memorandum trading account. Memorandum trading account means current year trading account. This is called normal trading account. Clear up to here? So tell me in this example, what is stock on date of fire? What is stock on date of fire? 59 lakh 90,000 5. Listen everybody, listen. That is the stock at the night. So fire accident has happened. Unfortunately, some procedures are there. After that, we have some scrap is there. Scrap means the remaining goods. There may be some iron or plastic or some partial destroyed goods. They are called scrap. So scrap is, or scrap value is some 9 lakh rupees. You are insurance company CEO. You came to my business. You are literally seeing some scrap is there 9 lakh rupees. What is the stock value at night? Tell me, if you are CEO, how much you will give to me? 50? 9 lakhs istara miru? What you will do? You will reduce this amount. You will give me 50 lakh 90,000. So this is called actual loss. That means we can write formula actual loss is equals to stock on date of fire minus scrap value. Okay, Nandi? So I am giving step by step. Step number 1, I have opened memorandum trading account. What is my main agenda, main purpose towards it? To finding stock on date of fire. But what happened, unfortunately, I don't know gross profit. That's why I have opened normal trading account to find out gross profit. Next, I found out gross profit ratio. From this, I found out stock on date of 5. So that is called stock on date of fire. But we need to find out actual loss. Actual loss is equals to stock on date of fire minus scrap value. Are you getting my point? Yes, sir. Please copy this as well. Now listen everybody. So what is actual loss in this example? 50 lakh 90,000. What is stock on date of fire? Remember, now what is our main agenda? To find out insurance claim. Imagine, for example, policy value. What is the meaning of policy value? For how much we insured. So, imagine policy value is 60 lakh rupees in case 1. In case 2, policy value is 45 lakhs. Use your common sense if you have. You don't try. So you tell me, in case 1, if you are CEO of insurance company, how much you will give to ABC Limited? How much? That means in this case, insurance claim amount is equals to 50 lakh 90,556. Actually, in case 1, my stock on date of fire is how much? 59 lakh 90,000. My policy value is how much? That means if your policy value is greater than or equals to stock on date of fire, that is called full insurance. What is that? Full insurance. That means my complete goods are insured. That is called full insurance. No sir, my policy value is less than stock on date of fire. That is called under insurance. What is that? Under insurance. Nothing but in our example, that is case 2. That is 45 lakh. Use your common sense. In this case, you tell me how much amount you will give to ABC Limited. Obviously no. How can you give 45 lakhs? No. Complete goods are not insured. They will not give 45 lakhs. For example, all these are my goods, okay? Out of goods, you insured only some of the goods. Remaining portion may be destroyed. How can you ask entire money? They cannot give you 45 lakhs. Are you getting my point? So in that case, there is a formula for insurance claim, that is as soon as possible. Nothing but A by S into P. A means actual loss, S means stock on date of fire, P means policy value. So what is actual loss? 50 lakh 90,556. What is stock on date of fire? 59 lakh 90,556. What is policy value? Now find out. Definitely less than 45 lakhs for sure. 30. This is insurance claims in case 2. You will not get 45 lakhs. So what is the formula? As soon as possible. A by S into P. A for actual loss, S for stock on date of fire, P for... Actually, this particular formula, A by S into P, is called as average clause. What is that? Average clause. That means I will not give full amount, I will average your amount. Okay? That means if you ask me to prepare a chart, insurance claim, how much we should give, it's depend upon whether that is full insurance or under insurance. When it is full insurance, if your policy value is greater than or equals to stock on date of fire. When it is under insurance, policy value less than or equals to... Some students, they will compare actual loss and policy value. No. Policy value with stock on date of fire. If that is a full insurance, our insurance is claim is equals to actual loss. If it is under insurance, I have to apply average clause. Average clause. What is formula for average clause? Yeah, A by S into P. That's it. When we should apply average clause? Full or under insurance? Under insurance. How can you say that is under insurance? Policy value is less than or equals to stock on data. Policy value is high, full insurance, less under insurance. That's it. Clear, sir? Yeah, please do copy this as well. Hope you are getting whatever I am trying to convey. Thank you. Do you know what is happening in India? What is happening? New budget. That is last news. What is the latest news? Tomorrow is holiday. That is not correct news. Yeah, I'll show you. Yeah, actually, yeah, wait. So actually, from past 1 to 1.5 month, there is small dispute between India and USA. The dispute is with respect to Russia. Actually, India is importing oil from Russia. So that is, so we are importing oil from Russia. So directly Trump is warning India to stop importing oil from Russia. Otherwise, we will increase your tax rates. Definitely, we have so much of exports and imports from US, you know. So on all products, they have increased tax rates. That is called tariffs. They have increased tariffs. So in last night, there was a good meeting between our PM Narendra Modi ji and Donald Trump. So in that meeting, so Trump has announced we are reducing your taxes from 50% to 18%. So that has very great impact on Indian economy. So again, our Narendra Modi promised to the Trump, we are no more importing oil from Russia. That's why they have decreased their tariffs from 15 to 18%. So definitely it is impacting entire Indian economy, because we should maintain very good relationship with the USA, because they are in obviously number one position. So that's why today's stock market is impacting in very big way. Total Indian stock markets for the first time they have increased it by 1500 points for the past, I think, 5 to 6 years, subject to corrections. Very great impact on Indian stock markets. So whenever you have leisure time, try to collect this economic news. Okay? Yeah. What happened? Phones. IC means? Yeah, right, full forms, insurance claims. FI full insurance, UI under insurance. Done, everybody? So let's solve this question and then we'll leave the session. So listen this problem. X Limited has taken out a fire policy of 1,60,000. What is this value? This is called policy value. This is policy value. Okay. A fire occurred on 31st March 2020. What is this date? Date of fire. The following particulars are available. Stock as on 31st 12 2021. That means they are following calendar year. Okay. When fire accident happened? 31st March 2022. Stock as on 31st December 2021. Nothing but previous year, last year, opening stock or closing stock? That is last year closing stock. Purchases to the date of fire. That means current year data. Sales to the date of fire. Current year data. Carries inward of current year. Commission of current year. They have given directly gross profit ratio. That means in this case, no need to open last year trading account. They are giving directly gross profit ratio to you. But they have given on cost. We need on sales. Check your notes. What is on sales ratio? 33.3333%. That's why I have given that notes. In this example, you are asked to ascertain total loss claim. And stock salvaged means scrap value is given 41,360. Okay. So I'll answer this question. Just watch it. So first tell me, what should I open? No. Memorandum trading account. What is the date of beginning? 1/1/20. 2 na 1 na? 2022. What is the date of fire? 31st March 22. So DRC are compulsory. 2 opening stock. What is opening stock? Last year closing, current year opening only, no? How much? 60,000. 2 purchases. How much purchases? 2,60,000. Next one. 2 carries inward. How much? 1,600. Next one. What is this? Direct expenses only. How much? 2% on purchases. Do it in your calci. 2,60,000 into 2%. 5,000. 2 commission on purchase. How will you get it? 2,60,000 into 2%. 5,200. Next one. Buy sales. How much sales? How much sales? 1,80,000. Buy closing stock alias stock on date of fire. 2 gross profit, but we know gross profit rate. What is gross profit rate? 33.33% on sales. Nothing but 1,80,000 into 33.333%. Everybody switch on your calci and find out stock on date of fire. Two lakh 6,000 total bolo. Clear? So what is we found out? Stock on date of fire equals to 2,06,800. Scrap value is given, no? What is scrap value? 41,360. What is formula for actual loss? Actual loss equals to stock on date of fire minus, therefore 2,06,800 minus 41,000, how much? Great. What is this? Actual loss. But we need to find out what? Insurance claim. Calculation of insurance claim. It is depend upon what? It is depend upon whether it is full insurance or under insurance. We have to check full or under. How to check full or under? Policy value and actual loss. Stock on date of fire. What is policy value? 1,60,000. What is stock on date of fire? Stock on date of fire is 2,06,000. My dear student, is it full or under insurance? Therefore, policy value is less than stock on date of fire. This is under insurance. We have to apply average class. Therefore, insurance claim is equals to A by S into, in your exam you should not write A by S into B. They will completely strike off it. Okay. Actual loss by stock on date of fire into, what is actual loss? 1,65,440. What is stock on date of fire? 2,06,800 into policy value how much? 1 lakh. Therefore 1 lakh, that is the answer for insurance claims. You understood, sir? Tell me in this problem why I have not opened normal trading account? Because they have given gross profit directly. Otherwise I'll open trading account. But I have taken 33.33. Why not 50%? That is on cost. I need on sales. Clear? Yeah. If you don't mind, or if you mind also, no problem. Copy the question and answer. Samir, please write quickly, then I will give you one problem. You have to do it on your own as a homework. Yeah, same model, I'll just change the numbers. Yeah, please. Yeah, I have another class, please, quick. Empty means? Yeah. Can I scroll, sir? Sir, you tell me, if policy value is 5 lakhs, what is the answer? Actual loss equals, insurance claim is equals to actual loss. No need to apply this formula. Class, because that is an under insurance. Done, sir, everybody? Quick. Yeah, so solve this question. We'll meet tomorrow. Bye, sir. Okay. Yeah. So in last class, we have covered one problem in insurance claims. So the last two classes summary is we are finding insurance claim. How to find out insurance claims in case of loss of stock? First we have to prepare memorandum trading account. Memorandum trading account is nothing but trading account only from the year beginning to the date of file. So how will you get opening stock of memorandum trading account? Last year closing stock. They will give you current year purchases, current year sales, current year direct expenses if any. So if you close total memorandum trading account, you will have on debit side 2 gross profit, on credit side closing stock, nothing but a stock on date of fire. Unfortunately, on both sides of memorandum trading account is not yet found. That means This is the required figure, nothing but stock on date of fire. So to find out stock on date of fire, I need to find out gross profit. But unfortunately, I don't have any gross profit ratio. If they are given in the question, directly I'll apply on sales, I'll get gross profit, then this is the balancing figure. If they have not given, what I have to do? I have to open last year trading account. From that I'll found out last year gross profit, then I'll use the formula for GP ratio. What is the formula? Gross profit by sales into. From that I'll find out GP ratio, I'll apply that ratio here, then this is the answer. And what is the formula for actual loss? Actual loss is equals to stock on date of fire minus scrap value. They will give you scrap value, you don't worry. If they have not given, that is 0. So that means we found out stock on date of fire as well as actual loss. But the required one is insurance claim. I told you how to find out insurance claim. It is depend upon whether that is a full insurance or under insurance. If a policy value is greater than or equals to stock on date of fire, that is full insurance. So if it is less than, that is called under insurance. In case of full insurance, actual loss is the insurance claim. In case of under insurance, we have to apply average class. What is average class? A by S into P. A for actual loss, S for stock on date of fire, P for policy. You will get the answer in case of under insurance. We have solved some examples and one question as well. Okay. Now listen everybody. For example, in one company, goods are destroyed. Now you have to find out insurance claim. Firstly, we have to open memorandum trading account of current year, but we don't know gross profit. Tell me what to do to find out gross profit. Wait. That means you are taking an assumption that my last year GP ratio is current year GP ratio. I have one small query. Definitely every business will develop year by year. How can you take last year GP ratio is current year GP ratio? Just we are taking an assumption. Ala undochemo. We are taking an assumption. What is that assumption? My current year gross profit ratio is same as last year gross profit ratio. If last year my GP ratio is 10%, current year also 10%. If it is last year 20, current year also 20%. If last year 50, current year also 50%. And first of all, how can you find out gross profit in normal sense? For example, listen. This is last year, this is current year. Last year, my purchase price of good is 10 rupees, my selling price is 15 rupees, gross profit 5 rupees. In current year, also purchase price 10, selling price 15. Then you can apply 5 rupees here also. That means you can take that assumption only if purchase price and selling price are same as last year. If there is any change in purchase price or selling price, you cannot take that assumption. Are you getting my point? So if you want to take last year gross profit ratio in current year, there is one fundamental condition. What is that condition? There should not be any change in purchase price or selling price. In case purchase price aina selling price aina change aithe manu last year ratio current year lo apply cheyakudadu. Why sir? Simple reason. GP ratio will get changed. From where I will get GP ratio? from purchase and selling price only. So what is the fundamental point? If you want to apply last year rate in current year, there is a fundamental requirement, that is last year PP and SP, nothing but purchase price and selling price should be same as current year. If there is any change, I cannot apply directly that rate. Okay, we have one question, then you will get clarity how I am applying that condition in this question. I think all of you open your workbooks. Everybody look at question number 4, page number 114. Please try to read the entire question, then I will explain. A fire occurred on 15th September 2021. What is this date? Date of fire. One is date of fire 15 September 21 in the premises of S and Co. From the following figures, calculate amount of claim to be lodged in the insurance company for loss of stock. So don't read anything, just look at the screen. Tell me whether they are following calendar year or accounting year. How can you say calendar year? Starting date 1st January. They are following calendar year only. That means what is the last year? Last year means 1/1/20 to 31st December 20. Current year means 1/1/21 to 15th September 21. That's it. Now come to the question. Stock at cost on 1/1/2020. That means last year opening stock. Stock at cost on 1/1/21. Or you can say last year closing stock. Correct? No. This is last year closing and current year opening. And then purchases in 20. Last year purchases. Purchases from mistake. Rectify it. 1/1/2021 to 15/9/21. That means current year purchases. Sales in 2020. Last year sales. Sales from 1/1/2021 to 15/9/21. 2,10,000. Current year sales. Okay. Yeah. For example, this is the question. Okay. Same as your previous question. I think you know what to do. What we have to do first of all? Memorandum, trading account, and then trading account, and then GP ratio. Put it in memorandum trading account. You will get a stock on date of fire. Please do it in your rough book, not in main book. Please. If you don't have rough book, ask your friend's notebook. and exchange. Yeah, tell me what is opening stock of memorandum trading account? 60,000. Purchases? Current year purchases 1,76,000. Any direct expenses are there? Buy sales how much? 2,10,000. Do you know closing stock? Do you know gross profit? No. For gross profit we need to open normal trading account of last year. Bolo, what is last year opening stock? 40. 2 purchases 80. Buy sales 1 lakh. Closing stock is there. How much? Super, close it. $1,80,000 gross profit. 2 gross profit 60,000. So from this I'll find out GP ratio. What is GP ratio formula? Gross profit by sales into how much gross profit? Sales into 100. How much? I got GP ratio. I'll apply this percentage here. 2,10,000 is sales, no? Into 50%. 1 lakh. Then the balance is stock on date of fire, nothing but 3 lakh 40. 1,31,000. That is the answer. Everybody, please check it out. Where is the mistake or corrections to be needed? Don't write in your notebook. Done, sir, everybody? Okay. Now come to the question. Turn over the page. In next page, there is some additional data. What is the data? Have a look. During the current year, cost of purchase has risen by, purchase price has been increased. At the same time, selling price also increased by 5%. So already I told you beginning of this problem, if there is any change in purchase price and selling price, you should not apply last year percentage in current year. That means this percentage is correct. 100% this is correct. I am agreeing with your answer. But you should not apply that percentage here. Why, sir? This purchases value has been increased. Selling price is also has been increased. That's why our answer is 100% not correct. If question ends with this space, our answer is 1,31,000 is the final answer. But what is the information in the next page? Purchase price has been increased, selling price has been increased. Already I told you, you can apply last year GP ratio in current year only if there is no change in purchase price and selling price in current year. If there is any change in purchase price or selling price, you cannot apply last year GP ratio in current year. So same thing happened in the present problem. What happened? Prices has been increased. So I cannot apply last year gross profit ratio in current year. But I need stock on date of fire. So this is completely wrong. Why? Because I cannot apply. Normally your answer is correct only if there is no additional information. If question ends with here, your answer is 100% correct. You will get 7 by 7. In this case, how to do? Please observe. I will tell you. Okay. My dear students, what is memorandum trading account format? To opening stock. Great. What is opening stock value of memorandum trading account? 60,000, right? Come to question, verify your question. Purchase price increased, selling price increased. That means there is no change in opening stock. That means my opening stock is 60,000 only. If there is change in rate or if there is no change in rate also, my opening stock value is always 60,000. There is no change. Okay. Next one, two purchases. What is current year purchases? 1 lakh. But unfortunately, this 1,76,000 increased by 10%. That means, for example, have a look. So this good value is normally last year 100 rupees. Current year 10% increase means how much? 110 rupees. Listen everybody, this remote cost is 110 rupees. When compared to last year, 10% increased. That means what is the last year amount? 100 rupees. How are you saying it? 110 rupees by 110 into 100. Are you getting my point? Or else one more example. This asset value is 25,000 in current year. So it is increased by 10% when compared to last year. That means how can you find out last year amount? 25,000 by 110 into 100. You will get last year amount. Similarly, here also this 176 is increased price. Tell me, if there is no change in purchase price, what is the purchase amount? It will become 1,76,000 by 110 into 10. Say 1,60,000. 1,60,000. Now everybody enter 1,60,000 plus 10%. You will get 1,76,000. What happened? So this is the current year purchases. Amount is same. But we need, if there is no change in purchase price, what is my purchase value? 1,60,000. That means here I am maintaining two columns. One column is if there is no change in prices. This is change in prices. Opening stock is not changing because there is change in purchase price and selling price. Are you getting my point? On credit side also, I will maintain two columns. No change in prices. Other side, changes in prices. Buy sales. What is sales amount in current year? 2 lakh. That is also increased by how much? Increased by 5%. So tell me, what is previous value then? If there is no change in, it is around 2,10,000 by 105 into 5. Why I am dividing by 105? 5% increased. That means last year how much? If there is no change in 2 lakh, then you can cross verify 2 lakh plus 5%. You will get 2,10,000. Are you getting my point? Here I am just finding out the figures if there is no change in prices. Then you have to ask me doubt. Why you are doing all this nonsense? I have logic. Just we realized that I cannot apply that GP ratio in current year. What is the reason why I cannot apply in current year? Because there is change in prices. Let me find out. There is no change in prices. On this I will apply the percentage. Are you getting my point? By closing stock. That I don't know. 2 gross profit. Now have a look. What is last year gross profit ratio? 50. Now I have to apply this 50% only if there is no change in purchase price and selling price. That means I can apply that percentage on this 2 lakhs but not on this 2,10,000. Why? Because that selling price has been increased by 5%. That means this column I can fill with 2 lakh into what is the percentage? 50%. Then 1 lakh. Then I can balance this as account 1 lakh plus 160, 260 plus 60, 3,20,000. This is what? Stock on data file. Try to understand the logic. Why here I am adding one more column? The logic is very clear, because there is change in purchase price and selling price. If there is no such data, your answer is correct, whatever you have written in your rough notebook. So, but in this case, I cannot apply that rate on these percentages. Then what is the solution? Let's find out the values if there is no change in such purchase price and selling price. On that figure, I can apply this percentage. Then I got how much? 1,20,000. But I cannot say 1,20,000 is the stock on data file value. Why? Because that figure as per last year calculation. But we need as per current year calculations. Are you getting my point? Here you have to use your common sense. So what is the, actually this is the required figure. This is the required amount. Sir, how much, sir? Very simple. From where you will get closing stock? Either from opening stock or purchases. Majority from purchases only. Purchase rate has been increased by 10%. What is the stock on data file as per previous year calculation? 1,20,000. That may be increased by 10%, obviously. That means this will become 1,20,000 plus 10%. Sir, what is this logic, sir? Very simple. From where I will get closing stock? From purchases only. Purchase increased by how much? 10%. Closing stock was increased by the 10%. So the answer is 1,32,000. This is the stock on data file. Understanding this problem is not that much easy. అర్థమవుతుందండి? If this paragraph is not there in the question, whatever we have done is correct. So because of these changes in purchase price and selling prices, I cannot directly apply those rate in my memorandum trading account. Then what is the solution? I have to find out new figures if there is no such change in purchase price and selling price. Then I can apply that percentage. Then I got gross profit and I got stock on data file. But that stock on data file is as per previous year calculation. I need as per current year only, because I am doing for current year. Here you have to use your common sense. What is that common sense? Closing stock comes from the purchases only. Purchase increased by 10%. Closing stock was increased by the 10%. 120 plus 10%, 1,32,000. So therefore, stock on data file equals to 1,32,000. Actual loss equals to stock on data file minus scrap value. What is the scrap value? That means actual loss equals to, what about insurance claim? Whether they have given policy value? Then ignore. This is the answer. I think you struck with this calculation. Try to understand. If you just observe it numbers, you can only find out numbers only. Try to understand why I am doing all this. Why not a single column? Why I am doing double column calculation? Are you getting my point? My main agenda is to find out this figure. This is only for getting this number. Okay? Please copy and try to understand the problem. No change in prices, change in prices. Yeah, tell me. Which, why added this 10%? Uh, A values. How you got this 1,60,000? Yeah, come to the question. What is current year purchases? 1,76,000. So they are telling us 10% increased. That means current year value increased by 10%. We have to find out what is the value if there is no change in that percentage. That means by 110 into 100. Okay, you will get 1,60,000. Similarly, sales. Sales how much? 2 lakh. Sales increased by 5% only. And then 2,10,000 by 105 into 5. 2 lakhs. Okay. Let's write working note for it. Don't worry. Purchases working note number 1. Sales working note number 2. Yeah, if you have any doubts, feel free to ask me in class itself. Please check completed 2 questions by tomorrow morning session, including all the new students. Please verify all the concepts and all these 2 questions. Yeah, my dear students, so in the last class, we have discussed one beautiful problem, which is insurance claim problem number 4. What is the highlight of this problem? In this problem, what happened? So, purchase price and selling price has been changed, has been completely changed, increased. Maybe in your exam, they may say it is decreased. Then what you have to do, tell me? By 90 into 10. For example, question is they are telling us purchasing price 10% decreased. Then what to do? Instead of writing divided by 1, you have to write 90. Okay, 90 into 10. 90 into 100. In sales price also, by 95 into 100. Okay? Yeah. So, open your workbooks. Where are we exactly? Question number 4 is done now. Everybody come to question number 3, my dear students. First read the question and understand the question. Ignore about length and volume of the question. Try to read and understand in our normal language. Then if you understand the question, 50% answer is done. Try to understand the question. Yeah. Listen. A fire occurred in the premises of Sri G. Venkatesh on 1/4/2022. What is this date? Date of fire. Write down date of fire is 1/4/22. And considerable part of the stock was destroyed. The stock salvaged. Nothing but what is this figure? This is scrap value. How much scrap value? 20. Sri Venkatesh had taken a fire insurance policy for 17,10,000. What is this amount? That is policy value. Super, I'm impressed. At least you are able to identify what is those figures. To cover the loss of stock by fire accident, you are required to ascertain insurance claim. They are asking you to find out how much insurance claim. Company should claim from insurance company for the loss of stock by fire. The following particulars are available. First of all, you have to identify firstly in insurance company question whether they are following a calendar year or accounting year. Which year they are following? That means what is last year? Last year equals to 1/1/21 to 31/12/21. Here current year means 1/1/22 to 1/4/22. Why 1/4/22? That is the fire accident date. Super. Yeah. So they have given some data. Purchases for 2021. That means last year purchases. Sales for 2021. Last year sales. Purchases from this period means current year sales. Sales for current year. Yeah, this is important. Stock on 1/1/21. Last year opening stock. Stock on 31/12/21. Last year closing stock and current year opening stock. Okay, both are same. Wages paid 2021. Last year wages. Wages paid in current year. Current year wages. Sri Venkatesh had in June 2021 consigned goods worth of 50,000 which unfortunately were lost in transit. So this is goods lost in transit. If you remember in the first day of our chapter I have given trading account format and credited I have written buy goods lost in. That is the point. That's why I told on first day itself. Since there was no insurance cover taken, the loss had borne by him full fine. Stock at the end of each year. This is important paragraph. Stock at the end of each year for until the end of calendar year 2020 had been valued at cost less 10%. That means what is our opening stock actually? 1,40,000. That is not a correct figure. That is reduced by 10%. Switch on your calci and tell me correct figure. How can you find out? 1,44,000 by 90 into 100. Say 1,60,000. That's it. Are you getting my point? And from 2021, however, there was a change in valuation of stock, adding 10%. That means this stock also not correct. This is 10% increased. Now you have to reduce. That means 2,42,000 by 110 into 100. 2 lakh. That means these two figures are not correct figures. The first figure has been reduced. We have to increase it. That means 1,44,000 by 90 into 100. 1,60,000. Second figure, it is increased by 10%. We have to reduce it. 2,42,000 by 110 into 10. Remaining is normal. Are you getting my point? This is the only star item in this question. If this paragraph is not there, your answer is very easy. Just for the practice purpose, imagine this is not there in the question. Give me answer in rough. Do it, everybody, including students who are watching on online. Give me your answer in comment section. Imagine that paragraph is not there. Open trading account, memorandum trading account, but include this GLT, okay? In which account? Normal trading account. Buy goods lost in transit. Please, if you have any small doubt, please ask me. Rectify your doubts in classroom itself. Those who got answers, help to your friends. Then you will also get confidence. Tell me what is memorandum opening stock? 2 lakhs? Memorandum opening stock, sir. Correct? Huh? Wow, great. Next one, purchases? 1 lakh? 82. Wages? 1 lakh? Any other expenses? Sales? 2 lakh? Only 24. 24 lakhs. Stock on date of hire, we don't know. What is gross profit ratio? Do you know it? They have given in the question. We have to find it out. For finding gross profit, what we have to do? Sorry? We have to open trading account of last year. Polo, what is opening stock of last year? 1,44,000. Next one. How much? 9,38,000. What else? 2 wages. 1 lakh. Buy sales. 11 lakh. 60. Buy goods lost in transit. 50,000. 2 gross profit by closing stock. 2 lakh 42,000. Then what is the gross profit? 2 lakh. Accident is on. Okay, that means there is mistake. It may be 1,60,000. There may be mistake in the question, but still, I am not running behind the answer. Okay, what is the percent gross profit? Sorry? Amount. Okay, got it. Yeah, 5 lakh. Opening stock 1,60,000 only. Purchase how much? 9,38,000. Wages 1 lakh. Sales how much? 11,60,000. Then closing stock. Yeah, we are absolutely correct. No problem. Yeah. Tell me gross profit. 2,70,000. GP ratio. 2,70,000 by sales how much? Sales 11,60,000 into 100. 20. We have to apply this percentage on sales. 24 lakh into that percentage. 5 lakh. 58,600. 558,480 na? Okay. What is stock on date of hire? Negative figure vastunda? Okay. What, for example, something has given. Okay. Actually, whatever you get, that is the correct answer. Normally. Okay. But in this problem, what happened? Come to the question. What happened? Look at the last paragraph. Focus on last paragraph. Stock at the end of each year until end of calendar year 2020. That means 2021 opening stock only, no? 20 closing stock means. That means in opening stock of 2021, what happened? They valued cost less 10%. That means that figure is not correct. Which figure is not correct? So this 1,44,000 is not correct. So this is reduced by 10%. That is not fair. No. Let's increase. How to increase? 1,44,000 by 90 into 100. 1,60,000. Again get back to the question. What happened? However, there was a change in valuation of closing stock which ascertained adding 10% its cost from 2021. That means in this valuation, so this amount is also not correct because that is increased. So remember, for in insurance claims, always we should present correct figures. That means this 2,42,000 is also wrong because that is increased by 10%. That means 2,42,000 by 110 into 100. Do it. 2,20,000. Then our gross profit will get changed. Sorry, 2,32,000 is the gross profit. Then tell me gross profit ratio. 20%. Now we have to change this amount then. How will I get 24 lakh into 20%? 4,80,000. Then what is SODF? Wow, how nice the sound of calculators. Sorry? 131600. So they are asking not stock on data, but they are asking insurance claim. Then what is the next item? Actual loss. What is the formula? Stock on date of fire minus scrap value. My dear students, what is stock on date of fire? Look at your question. What is scrap value? 20. Then how much? 12,88,000. That is actual loss. But they are asking insurance claim. You all know how to find out insurance claim. So we have to first check policy value. How much policy value? 17,10,000. We have to compare with what? Stock on date of fire. How much? 13,16,000. You tell me, my dear students, is it full insurance or under insurance? Therefore, policy value is greater than stock on date of fire. This is full insurance. Therefore, insurance claim is equals to actual loss is equals to 12,88,000. If it is under insurance, what I have to do? Average class formula A by S into A for S for P for. My dear students, tell me what is the star item or important item or special item in this question? Only adjustment of opening stock and closing stock. And they are giving one more point, goods lost in transit. Remaining is as same as your previous questions. If you observe, in each and every problem, you are learning one important new adjustment. Okay? Don't focus on numbers, answers. Anyway, you will get the answers if you prepare at least 1 or 2 times. Focus on adjustments, why we are doing all this. For example, if one of the student is here, if she get wrong answer also no problem for me. But if you understood the entire procedure, why I am doing by 90 into 100, I'll feel very happy. You have to feel very happy because you're understanding the concept rather than numbers. Don't focus on numbers, focus on the procedure and concept. Okay? Yeah, please do copy. If you have any small doubt, please. Yeah, don't write, please be on hold. Open your workbook. There is some small clerical mistakes in the question. This is only 1,71,000. Remove 10. In your workbook, open your workbook, remove 10. And this is 2,40,000, remove 10. Wages paid also, remove 10. Our answer is correct only, but technically that is not correct. Question itself wrong. Then I want to just modify my answer. Tell me, ekkada marchalra? Sales, how much? 2,40,000. Wages? Wages 18,000. Gross profit 48,000. Then stock on date of hire 2,50,000. Yeah, actually, so this closing stock is how much? That means this is also same, no? How much? 2,20,000. How we got it? 2,42,000 by 110 into 100. Now find out. 2,28,000. Then everything I have to change. What is the scrap value? 2,28,000 minus 28,000. Nothing but 2 lakhs. Then what is policy value? 1,71,000. Stock on date of hire 2,20,000. Your policy value is less than stock on date of hire. This is under insurance. We have to apply average clause. Therefore, insurance claim is equals to A by S into what is A? 2 lakhs. 2 lakhs. By stock on date of hire 2,28,000. Policy value 1,71,000. 1 lakh. That is the answer. Again, my point is don't look at the numbers. If you are perfect the procedure, that is okay. నెక్స్ట్ వీకెండ్ ఎగ్జామ్ సిలబస్ టోటల్ ఇన్సూరెన్స్ క్లెయిమ్స్ చాప్టర్ అండి. నెక్స్ట్ వీక్, కమింగ్ వీక్. క్వశ్చన్ నెంబర్ 2 అయిందండి. 2, 3, 4. Completed, sir? Yeah, then please check all previous 3 questions. What is the procedure in insurance claims to calculation of insurance claims in loss of stock? What is the first step? Preparation of memorandum trading account. So why we are preparing memorandum trading account? To find out stock on date of fire. If you prepare memorandum trading account, debit side we have to write opening stock. Opening stock means current year opening stock alias previous year or last year closing stock. They will give you current year purchases, current year wages, current year direct expenses, current year sales. On debit side we have to find out gross profit. Credit side we have to find out stock on date of fire. Both are missing figures. That means we need a gross profit immediately. If they given the question, we can directly apply on sales. Then the balancing figure would be the stock on date of fire. Otherwise, we have to find out gross profit ratio. How to find out gross profit ratio? By preparing a last year trading account. If you open last year trading account, you have to write debit side last year opening stock, last year purchases, last year wages. Yeah, last year wages, last year expenses, credit side, last year sales, last year closing stock. Then you will get a last year gross profit. On that we have to find out a gross profit ratio. What is the formula for gross profit ratio? Gross profit by sales into, we have to apply that percentage in a current year. Then we will get a current year GP ratio. Then we will get out a stock on date of fire. Then we spoke about actual loss. What is the formula for actual loss? Actual loss equals to stock on date of fire minus, for example, in one question they have not given scrap value. Then we assumed it as a 0. Then we have to find out insurance claim. It is depend upon whether that is a full insurance or under insurance. How to tell that is full or under insurance? We have to compare policy value and stock on date of fire. If your policy value is more, that is full insurance, otherwise that is under insurance. If that is full insurance, actual loss will be the insurance claim. If that is under, we have to apply average class. Actual loss of stock by stock on date of fire into policy. We have discussed some problems. In one of the problem, I think in question number 2, whatever it is, I think the first problem we have covered. In that problem, they are giving directly gross profit ratio in the question itself. But they have given on cost. We need on sales. If I am not wrong, they have given us on cost 50%. On sales it is 33.333%. In next question, the surprising fact is about, what is the new point in the next question? Yeah, 10%. Yeah, purchase price is increased and 5% selling price has been increased. So we have to change those figures. If it is increased, no, how to reduce that figure? By 110 into 10. For sales, by 105 into 5. Okay. In the next question, what happened? In the next question, closing stock. The same question itself. Question highlighted. Yeah, purchases increase similar to the previous problem. Here also we have to take that figure to the normal amount. Okay. Yeah, who have listened the previous class, I think you understood what I am trying to convey here. Okay. So if you remember in the first class of our chapter, I told you very clearly, if I want to divide into 2 parts, one part is actually 3 parts. Loss of stock, loss of profit, abnormal loss of goods, but mainly loss of stock and loss of profit. So loss of stock is done. Before entering the loss of profit, let me discuss something. Think practically. For example, You have started one business, so that business is running very successfully. So unfortunately, on today, that means 7th February 2026, a big fire accident happened. Everything is destroyed. Your all goods, assets, machinery, everything is destroyed, including all building. Everything is destroyed. Definitely, you are covered by loss of stock. You will get some amount for those loss of goods. That is okay, fine. My question is about future. Think practically. Can you start business from tomorrow onwards as usually? Can you do so? Can you get same amount of sales after this fire accident? Can you get same profit? Maybe you can do the business. For example, in normal time, if my sales are 1 lakh rupees, in this situation, my sales may be 20 or 30,000. Because I don't have machinery, I don't have proper goods, I don't have all this setup. That means at least I will take some 5 months or 6 months to normalize my business. To again purchase all machinery, to remodel my building, everything. Maybe after 5 or 6 months, then I will be normalized. Then I will get the same profit whatever I am getting before fire accident. That means due to fire accident, my stock is destroyed. That is one loss. That is okay. But the consequences is, in future, definitely, my sales will be reduced for some period. That period may be 2 months, 3 months, 4 months, 5 months or 6 months, depend upon the business level, business strength, business capability. For example, every month my sales are 10 lakhs. In this period, my sales will not be 10 lakhs. It may be 2 lakh or 3 lakhs around. That means my sales will be decreased in the coming next 5 or 6 months. Whenever your sales are decreased, what is going to happen? Your profit will also decrease. So think and observe very carefully. Because of fire accident, my stock is destroyed. That is okay. I am getting insurance claim. But because of that fire accident only, in future, I am losing some profit also. Why I am losing profit? My sales are decreasing. That's why I am losing my profit. Because of what? Because of fire accident only. This is also risk to the business organization. So for this loss also, I can take an insurance policy. That is called loss of profit. What is loss of stock? Loss of stock is about, sir, my stock is lost, give me insurance claim. Similarly, because of that accident, I lost my profit, please compensate it. Are you getting my point? I lost profit not because of my capability. I lost profit only because of that fire accident. You have to prove that by comparing with the previous years. Are you getting it? Hello? So you have to compare previous year and current year. Sir, last year in this period, for example, fire accident is on 7th February, no? From here 6 months means, tell me. 7, 8, 26. Last year same period. That means 7 to 2025, 7, 8, 2025. Last year my sales in this period are 20 lakhs. Current year my sales are only 6 lakhs. Or some 12 lakhs. I lost 8 lakh sales because of that fire accident. That's why I lost some amount of profit. Please compensate it. So this policy is called loss of profit policy. That means in insurance claims we are going to discuss two types of insurance policies. One is loss of stock policy. Second one is loss of profit policy. In case of loss of stock, our main agenda is to find out insurance claim. Here also our agenda is to find out insurance claim. In loss of stock, the stepwise calculation is we have to prepare a memorandum trading account and trading account, GP ratio, actual loss and insurance claim. But in loss of profit policy, again here also our main agenda is to find out insurance claim. But in this loss of profit policy, we have to follow 8 steps. I am going to give you 8 steps given by the Accounting Standards and Companies Act itself. Everybody should follow these 8 steps as it is. You have to remember all these 8 steps. You cannot and you should not use your own methods. How many steps? 8 steps. So before entering into those 8 steps, you have to understood some basic terminology. Here I am going to introduce those terminology. Okay. The first term is for example, date of fire equals to 7th February 2025. So that question our companies is, sir, today is fire accident, sir. From today it will take around 6 months to normalize our activities. These 6 months our business is completely disturbed. So we cannot do normal sales. So 6 months means what is the starting date? 7th February 2025 to 7th August 2025. This period is called indemnity period. What is that? Indemnity period. Indemnity period means the period for which our normal activities are disturbed. In that period, we cannot do as normal sales what we are selling before fire accident. That means the period which we got disturbed, the period which we our activities are disturbed. Okay, you tell me. For example, date of fire accident is 7th Feb 2025. 4 months. Then indemnity period is equals to 7 to 25 to 7 6 25. Okay. What is indemnity period? The period for which normal activities are disturbed. Open your notebooks, give a heading. Write this short. Insurance claims divided into 2 parts. Loss of stock and loss of profit. Right up to indemnity period. Okay, listen. So for example, date of fire is 4th April 2024 or 2026. So they are telling us indemnity period is 3 months. That means 4/4/26 to 4/7/20. Tell me, dear students, what is the significance of these dates? What happened? In this period, their sales will be less when compared to their normal sales. Okay? You tell me, what is our topic right now? Our topic is loss of profit. Again, your agenda is to tell them how much insurance claims they will realize. That means you have to tell them how much profit you lost. In which period? In this period. That means from 4/4/2026 to 4/7/2026, how much profit we lost, we have to tell to the insurance company. Use your common sense. So this is my fire accident date. This is indemnity period. How can you tell me how much profit I lost? How can you tell? Just compare with last year. What is? So we have to compare with the last year, same date, same month. Nothing but we have to compare with 4/4/2025 to 4/7/2025. For example, in this period, my sales are 60,000 rupees. Last year, same period, my sales are 1 lakh rupees. Why my sales are decreased? Is it because of my capability or my disability? No. Why? Because of fire accident. You tell me how much sales reduced? 40,000 sales reduced. If my profit is 10%, how much profit I lost? 4,000 is called loss of profit. Give me 4,000. Okay, this is exactly what we are going to do now in loss of profit. Are you getting my point? This 4/4/2026 to 4/7/26, this is called what? Indemnity period. 4/4/2025 to 4/7/2025, this is called, we have to compare this 60,000 with this 1 lakh. No, that is we comparing purpose we are using it. That is standard. That is fixed. We have to compare with that. That is called standard turnover period. What is that? Standard turnover period. How will I get it? Same date, same month. I am just changing year. Previous year I am quoting it. So I think you are clear with the indemnity period and standard turnover period. Correct, sir? Yes. What is fire accident date? Tell me. 4/4/20. Yeah. Go back 1 year. That means 4/4/25. That means from fire accident to the 12 months back, 1 year back. This is called adjusted annual turnover period. What is that? Adjusted annual turnover period. So here I am introducing 3 terms to you guys. The first one is indemnity period. Second one is standard turnover period. Third one is, for example, You tell me what is the meaning of indemnity period? The period for which our activities are disturbed. Standard turnover means same period, same month, previous year. Auto period, nothing but adjusted turnover period means date of fire to the 12 months back. You tell me, for example, date of fire is 1st April 2026. Indemnity period is 3 months. Now you tell me what is indemnity period, what is standard turnover period, what is adjusted annual turnover period. Turnover period is 1 4 26 to 26. Standard turnover period 1 4 25 to 1 7 25. Auto 1 4 25 to clear. In your exam, they may say this is 31 6 26. Both are same. One day only, no? That is not a big deal. Just they may write previous month ending date or current month beginning. Both are same. Okay, don't confused. Clear up to here? So what is indemnity? Standard and adjusted annual turnover period. What is standard turnover period? Same date, same month, previous year. I'm just using terminology. Turnover of previous, turnover means sales of previous period means previous year. Corresponding to the, corresponding means same date, same month. Okay? Write down second terminology. Turnover means sales. Okay. Madhavi. Who is Madhavi? Yeah. Done up to here. Give 2 line space and write down adjusted annual turnover period. After completion of this, give 2 line space and write adjusted annual turnover period. Adjusted annual turnover period. Turnover during 12 months preceding to the date of fire. Turnover during 12 months preceding means immediately before. Okay. Again give 2 line space. Example number 1. After giving 2 line space, example number 1. Write down date of fire. 4/4/2026, 3 months. Then do it on your own. Write indemnity period, standard turnover period, adjusted annual turnover period. I think you understood. That's what I'm saying. After example number 1, write example number 2 and do it. Completed? Yeah. You tell me, my date of fire is not my date of fire. Date of fire. Yeah. Date of fire is 01/01/2026. Okay. Indemnity period is 3 months. Then tell me what is indemnity period? 1/1/26 to 1/4/20. So in this period, my sales are 70,000 rupees. Okay? Yeah. Standard turnover period. Nothing but 1/1/25 to 1/4/25. In that period, my sales are 1 lakh rupee. Now, I have to discuss one important point here. Listen. For example, he also doing same business, same goods. He is my competitor. So last year, if you look at his standard turnover, that means in this period, his sales are also 1 lakh. My sales are also 1 lakh. If you look at 1/1/2026 to 1/4/2026, in this period, his sales are 1,20,000. Try to understand what I am trying to convey. In last year, in this period, our sales are 1 lakh. In current year, what happened? His sales has been increased by 20,000 rupees. Now think beyond the box. Tell me, in current year, how much sales I lost? In current year, how much sales I lost? How much sales I lost? If there is no fire accident, my sales are also 1,20,000. Are you getting my point? If there is no fire accident, I am also getting 1,20,000, just like him. But what is my present sales? That means I lost 50,000 rupees stock. Are you getting my point? Or if you want to do it in another way, my present sales lost are 30,000. Are you getting my point? But normally, what happened? His sales increased by 20%. That means you can add 20% here. How much? 1,20,000, 70. How much? 50,000. That is called trend. That means in current year, my sales are not 1 lakh. I have to compare with 1 lakh plus 20%. Yeah. I am ready to explain 100 times also. No problem for me at all. Listen. So my indemnity period sales are how much? 70,000. Standard turnover period sales, sir. You tell me why I am writing this 1 lakh rupees? Just for comparison purpose, just I want to know how much sales reduced. Last year, how much sales? 1 lakh. If there is no fire accident, my sales in this period also should be 1 lakh. Normally, if see, look at BCCA college. See, last year our admissions are some 300 or 400. What is our target in next year? 500 or 600. If any company, they want to increase their sales. Definitely, last year this figure is 1 lakh. You should not compare with 1 lakh. If there is no fire accident, my sales would be 1,20,000. Compare with this 1,20,000, not with that 1 lakh. Are you getting my point? That means how much sales I lost? 70, 120, 50,000 sales I lost. That means if there is no fire accident, they definitely there my sales would be 1,20,000. That means there is increase in the trend in the market. That means whenever you are finding your standard turnover, that is last year sales. You should add what is the trend in the market. Trend means 20% increases. How can you say giving the question directly? That's why in standard turnover, I told you to give the space. Here write down. Yeah, no need. Yeah, as of now ignore. I'll tell you in the question itself, don't worry. Example 2 also completed, no? Yeah. Write down fourth term, number 4. Standing charges. Standing charges means unavoidable fixed cost. Unavoidable fixed cost. Example rent. Number 5, standard turnover. Turnover of standard turnover period plus or minus trend. In market, if it is reducing for your competitors, I am also, I have to reduce plus or minus trend. They will give the trend percentage. If they tell increases, add, decreases, less. Number 6, adjusted annual turnover equals to turnover of adjusted annual turnover period plus or minus trend. లాస్ట్ బెంచ్ చెప్పండి ఏదో మీ మనోవేదన. Completed? Yes, then let us discuss very important area. Here we are going to discuss calculation of insurance claim. So from this minute onwards, each and every discussion is very important. So please listen very carefully. Already I told you we are going to discuss 8 steps. First step, step number 1. You tell me what is step 1 in loss of stock? Why we prepare memorandum trading account to find out stock on? We will, the missing figure is gross profit. Here also step number 1 is calculation of gross profit. So you also start down calculation. First of all, give a heading, calculation of insurance claims. Yeah, have a look. I'll give you time for writing again. So, what is the first step? Calculation of gross profit of previous year. Similar to the first step in our loss of stock. But it is depend upon they will give you in the question last year net profit or net loss. Okay, if they have given net profit of last year, then gross profit equals to net profit plus insured standing charges. What is that? Insured standing charges. What is the meaning of standing charges? I have given notes for it. Unavoidable fixed costs. They will insure some, they are called insured standing charges. Then we will get gross profit. What is the formula? Net profit plus insured standing. No sir, last year they got net loss. Then what is the formula? Here gross profit equals to insured standing charges minus net loss into insured standing charges divided by total standing charges. I will explain, don't worry. So the step 1 is calculation of gross profit of last year. It is depend upon net profit or net loss. If they got net profit in last year, gross profit equals to net profit plus insured standing charges. No sir, last year there is net loss, then gross profit equals to, where is the ending point here? This is beginning point. Insured standing loss, no, minus into net loss into insured by total. Total means insured plus uninsured. Okay. So this is all about step number 1. What is step number 1? We'll find out gross profit of last year or previous year. How to find it out? Depend upon last year net profit or net loss. If last year net profit, what is formula? Gross profit equals to net profit plus insured standing charges. No sir, they got net loss in last year. Then gross profit equals to insured standing charges minus net loss into insured by total standing charges. Okay. Step number 2, very easy. That is GP ratio. What is GP ratio formula? Yes, that's it. That's it. Gross profit by which sales, last year sales into 100. 2 steps done out of 8 steps. Okay. What is step number 1? Calculation of gross profit of last year. How to find it out? Depend upon net profit or net loss. What is net profit? What is the gross profit? Net profit plus insured standing charge. If it is net loss, insured standing charges minus net loss into insured standing charges by. What is step number 2? Gross profit ratio. What is the formula? Gross profit by sales into 100. That's it. Please do copy these 2 steps. Okay. Why we are doing all these 8 steps calculation? To find out loss of profit. How can I get loss of profit? I'll find out first loss of sales into gross profit ratio, whatever I find it now. That means I need now how much sales I lost. Are you getting my point? In my example, how much sales I lost? 50,000. How I got this 50,000? 1,20,000 minus 70. Nothing but what is this 1,20,000 called? Standard turnover. This is called actual turnover. Nothing but step number 3. Listen, don't write. Step number 3. I am finding how much sales reduced. That is called short sales. Short means reduced. Short sales equals to standard turnover. Standard turnover means I think you know it. Minus actual turnover of indemnity period. In our example, 1,20,000 minus 70,000. Are you getting my point? Yeah. So what is step number 1? Calculation of gross profit. Step number 2, GP ratio. Step number 3, short sales. Who is Sai? Yeah. Please be seated. Standard turnover minus actual turnover of indemnity period is short sales. Clear? Yeah, copy quick. Yeah, listen. So step number 1 is gross profit. Step number 2 we found out gross profit ratio. Step number 3 we found out short sales. So now I need not how much sales I reduced. I need how much gross profit I lost. Are you getting my point? So listen, that means GP lost, nothing but gross profit lost. How can I get it? This short sales into GP ratio. I think when I was in third or fourth class, what happened? 9 years back exactly. Yeah, correct. Yeah, 10 years back. Yeah, yeah. So when I was, I think my maths teacher is asking tables. So at that time I was very good at tables. So he asked me what is 2 threes are how much? I said 4. Step 4 equals to step 2 into step 3 equals to, uh, what is step 4? Gross profit lost. Step 3 short sales. Step 2 GP ratio. 3 2s are 4 from this minute onwards. Okay. Yeah. Copy. Yeah, write down step number 5. After that, I will discuss. Step 5. Write down step number 5. Admissible additional expenses. Admissible additional expenses. Little bit lengthy step. Please write down. We will discuss later. Number 1. Actual additional expenses. Number 2. Sales due to additional expenses into GP ratio. Number 3. Actual additional expenses into net profit plus insured standing charges divided by net profit plus total standing charges. Whichever is lower. Yeah, listen. Definitely, while I was studying CA Inter, CMA Inter, my hostel fees is 2,400. As on today, it is in some hostel they are collecting 10 to 12,000. See, every year expenses will get increased. Last year my sales are 1 lakh. Current year my sales 70,000 because of fire accident, whatever it is. And normally last year my expenses are 20,000. Current year it is increased to 30,000. That means my expenses also increased when compared to last year. Are you getting my point? You also compensate that extra expenses also to me. Last year my expenses are 20,000. Current year it is 30,000. You are considering only sales. What about my expenses? That is also I lost because of your accident. Are you getting my point? So I will not allow you all of your expenses. I will allow you only calculate these three calculations and give me whichever is lower. For that I will give you extra amount in addition to this amount. I will give you GP last. In addition to that, because of your additional expenses, I will give you this extra amount. How much? How much extra you incurred when compared to last year? And point number 2, how much sales increased because of the expenditure into GP rate? Point number 3, your extra expenses into net profit plus issued by net profit plus. Give me that figure list. I will add to this and I will give you the amount. Okay. So what is step number 1? Tell me in your notes. Gross profit. How to find out gross profit? Depend upon net profit or net. If it is net profit, how to find out gross profit? Net profit plus insured standing charges. Net loss, insured standing charges minus net loss into insured standing charges by total standing charges. GP ratio, step number 2. What is the formula? Gross profit by sales into. Step number 3. Short sales, SAI. What is that? Standard turnover minus actual turnover of indemnity. Step 4. GP last. 4 equals to 3 into 2. Short sales into GP ratio. Step number 5. Admissible additional expenses. List of the following. Number 1. Actual additional expenses. Number 2. Sales due to additional expenses into GP ratio. Number 3. Actual additional expenses into net profit plus insured by net profit plus total standing charges. So now what you understood? Insurance company will give us 2 things. What are those 2 things? One is GP lost plus admissible additional expenses. What is the meaning of standing charges? Unavoidable fixed cost. I told you insured standing charges. Because of insurance, you may cover some expenses when compared to last year. So we have to give GP lost plus additional expenses minus savings in standing charges. What is that? Savings in standing charges. This much amount will be given by the insurance company to you. This is called cross claim. What is that? Cross claim. What is the formula? GP last plus additional expenses minus savings in standing. Actually, I'm a Navodaya student. I was a Navodaya student. So from 6th to 10th. So actually, to get seat in 6th class, I work for 2 years in class 4 and class 5. So for getting a seat in 6th class, I work for 4th class and 5th class up to SSC. SSC means savings in standing charges. Step 6 means cross claim. Step 4 is GP loss. Step 5 is admissible additional expenses. Yeah, please. Done, sir. Step 7. Write down you also. Insurable value equals to auto into GP. Auto means adjusted annual turnover into gross profit ratio. Yeah, listen, don't write. Last step, step number 8, net claim. Similar to our loss of stock, here also it depend upon full insurance, sir. You tell me in loss of stock, how can you say that is full or under? Policy value compare with here we have to compare policy value and insurable value. Here also same. If policy value is more, full insurance. If your policy value is less, that is under insurance. If it is full insurance, net claim is equals to gross claim. If it is under insurance, here also we have to apply average class. Here one more formula is there. Net claim equals to PIG. P by I into Z. P for policy value, I for insurable value, G for cross claim. That is loss of profit 8 steps. Yeah. Please do copy, my dear students. పిగ్ అర్థమైందండి? యా. చేయండి బట్ దొరకద్దు. సజెషన్. Yeah. So tell me what is step number 1 quick. Yeah. Calculation of gross profit of last year. What is the formula? If it is net profit. Net profit plus issued standing charges. If it is net loss, issued standing charges minus net loss into issued by total standing charges. Step number 2 GP ratio equals to gross profit by sales into 100. Step number 3 short sales equals to SAI. Step number 4 GP last equals to 3 into 2. Step number 5 admissible additional expenses. List of the following. Number 1 actual expenses. Number 2 sales due to expenses into GP ratio. Number 3 actual expenses into net profit plus issued by net profit plus total. Step number 6 cross claim equals to 4 plus 5 minus SSC. Step number 7 insurable value equals to auto into GP. Step number 8 net claim is depend upon full or under insurance. If it is full, net claim equal to cross. If it is under insurance, pick P by I into Z. Will meet tomorrow. Bye. Okay. Yeah, we are discussing loss of profit. In last session, we have covered 8 steps, right? What is step number 1? Calculation of gross profit of previous year. It's depend upon previous year net profit or net loss. If it is net profit, what is the formula? Net profit plus issued standing. If it is net loss, issued standing charges minus net loss into issued standing charges by. Step number 2 gross profit ratio. What is the formula? Gross profit by last year sales into. Step number 3 what is the formula? Standard turnover minus. Step number 4 gross profit last equals to short sales into GP ratio. Step number 5 admissible additional actual expenses, sales due additional expenses into GP ratio, actual expenses into net profit plus issued by net profit plus total, whichever is low. And then step number 6 gross claim equals to GP last plus admissible additional expenses minus savings in standing. Step number 7 insurable value equals to adjusted annual turnover into GP ratio. Step number 8 net claim. It's depend upon full insurance or how it is full or under policy value and insurable value. If policy value is more, that is called full, otherwise under. What is the formula for net claim in full insurance? If it is under insurance, policy value by insurable value into cross claim. Yeah, let's solve one problem on it. Yeah, everybody come to the question number 8, which is past examination question, June 2014, December 13, December 14 examination question. Everybody please open your books quickly. Page number 122, question number 8. On account of fire on June 15, 2021. What is this date? Date of fire. Write down there, that is date of fire. In business house of a company, the working remained disturbed up to December 15, 2021. Then what is indemnity period here? It is June 15 to December 15. The company had taken out an insurance policy with an average class. What is this 1,40,000? That is the policy value. An increase of 25% was marked in the current year sales as compared to last year. Nothing but a trend. So current year sales increased by 25%. The company incurred an additional expenditure of 12,000 to make sales possible. That is additional expenses. How much? 12,000. And savings in standing charges, SSC, 2,000. What is the requirement of the question? Ascertain the claim under the consequential loss policy. So they have given some data. Actual sales from 15/6 to 15/12, sales 15/6/20 to 15/12/20, net profit, insured standing charges, total standing charge. Turnover means sales of last year, sales of current year. So tell me first of all, is this loss of stock or loss of profit? Loss of profit. How can you say loss of profit? By look at this table, or they can say consequential loss, nothing but future loss. Okay, this is not a loss of stock question. So we identify it as a loss of profit. Then what to do? We have to apply 8 steps. You also open your notebook. Let's do it. What is the question number? 8. You also given question number 8. First, step 1. What is step 1? Calculation of gross profit. Okay. Yeah, tell me what is the formula for a gross profit. It is depend upon net profit or net loss. Look at your question, verify. Last year net profit or net loss? They got last year net profit. Then what is the formula? Yeah, gross profit equals to net profit plus insured standing charges. Open your question, tell me what is net profit. Sorry? 80 plus insured standing charges. Whether they have given in the question? How much? 70,000. 80 plus 70, 1,50,000 is gross profit. Okay. Next, step 2. What is step 2? Calculation of gross profit ratio. What is formula for gross profit ratio? Yeah, gross profit by last year sales into what is our gross profit? 1,50,000 by last year sales. Look at the question. Tell me how much last year sales? 6 lakhs. 1,50,000 by 6 lakhs into 100. How much? 25% is gross profit ratio. Then what is step 3? Or else you don't write. I'll give you time for writing. Just give me your inputs. Step 3. What is step 3? Short sales. What is the formula for short sales? Yeah, standard turnover minus actual turnover of indemnity period. What is the meaning of standard turnover, sir? Last year, same period, same date, but different year. Have a look. That means how much? How much? 2,40,000. 30,000. But already I told you, for standard turnover you have to consider trend also. Here what is the trend? What happened in the question? They are telling us add 25%. Then 2,40,000 plus 25% minus what is actual turnover in that period? What is actual turnover in that period? 70,000. That means minus 70,000. Switch on your calci and tell me. 2,30,000. Done. Next one. Step 4. Step 4 is gross profit lost equals to short sales into gross profit ratio. How much short sales? 2,30,000 into GP ratio 57,500. Step 4 is done. Next, step 5. What is step 5? Admissible additional. Dantlo, what is the first point in that? Actual additional expenses. How much they have given the question? They have incurred extra 12,000 equals to 12,000. Point number 2. Sales due to additional expenses into. Look at the question. How much sales increased due to the additional expenses? Whether they have given? No. No, they have not given. In that case, we assume that total sales in that period are additional sales. How much? Sorry, in that period, 70,000. Assumption. That means 70,000 into 25%. How much? What is 3? Actual additional expenses into net profit plus ensued standing charges divided by net profit plus how much actual expenses? 12,000 into what is net profit? 80,000, correct. 80,000 plus insured how much? 70,000 by total standing charges they have given. Total standing charges. They have given only insured, no? Total how much? 1,20,000. How much? 9,000. Only, no? So first one 12,000, second one 17,500, third one whichever is lower. Therefore, equals to 9,000. Next, step number 6. What is step 6? Gross claim. What is the formula? Gross profit lost plus admissible additional expenses minus SSC. How much gross profit lost? Gross profit lost. So 57,500 plus 9,000 minus SSC how much? 2,000. 64,500. Okay. Next one, step number 7. What is step number 7? Insurable value equals to adjusted annual turnover into nothing but this figure only, no? 1 year back from the date of hire, how much? 5 lakh. Remember, my dear students, what is the trend in this question? 20. Remember, last time I am telling you, you have to apply the trend in two scenarios. One is standard turnover, second one is adjusted annual turnover. That means here 5,60,000 plus 25% into 25%. 1,75,000. And the last step, step number 8, net claim. We have to first check policy value and insurable value. What is the policy value? 1,40,000. So therefore policy value is less than insurable value. So this is under insurance. Therefore net claim equals to average class P by I into Z. What is policy value? 1,40,000. What is insurable value? 1,75,000. What is gross claim? 64,500. 51,000. That is your answer. Okay, just we have to follow 8 steps, nothing more than that. First, once again, read the question and then come to the answer, dear students. First, read the question. I think you have materials. So we have to apply trend in standard turnover as well as what is it called? Adjusted annual turnover. In these two places we have to apply the trend. Yeah, come to question number 9. Let's solve one more question on it, then you will get full clarity on this concept. From the following, question number 9, page number 123. From the following details, calculate consequential loss. Nothing but they are discussing about loss of profit. Date of fire is September 1st. Indemnity period they are giving directly September 1st to Feb 1st. Small mistake, ignore it. Sum insured means write down policy value. How much policy value? 1,08,000. What is indemnity period? September 1st to the February 1st. Sales were 6 lakh for preceding financial year. So they have given last year sales. At the same time, net profit for preceding year is 36,000 plus insured standing charges 72,000. Gross profit rate 18%. Actually, we have to find out gross profit ratio. They are giving directly. Then no need to apply step 1, step 2. And turnover during disruption. Nothing but what is the meaning of this sentence? Actual turnover in indemnity period. Next one, annual turnover for 12 months preceding to the date of fire. What is this? 12 months, that is adjusted annual turnover. This is actual turnover of indemnity period. Next one, standard turnover they are giving 2,25,000 and increase in cost of working capital 12,000 with the savings in insured standing charges 4,500. They are giving something else. Increase in gross profit 2%. Increase in turnover, that means what is this? Trend. How much? 10%. Okay. First of all, imagine this is the examination question. Let's see how to answer this question. First of all, is this question loss of stock or loss of profit or abnormal goods? Loss of profit. What is step number 1? Calculation of gross profit. Let's do it, no issue. So how to find out gross profit? It depends upon net profit or net loss. You don't do it, just help me out. So tell me, in that question, is it net profit or net loss? Tell me then, net profit plus insured standing charges. What is net profit? 36,000 plus 72,000. 1,08,000. Then step 2. Calculation of GP ratio. What is the formula for GP ratio? Gross profit by sales into how much gross profit? What is the sales of last year? Into 100. How much? In fact, they have given it also. How much? 18%. But if you scroll your material, I think if you turn the page, what is happening? Increase in gross profit rate 2%. That means as per their requirement, gross profit equals to 18% plus 2% equals to, if that point is not there, our gross profit is 18% only. Okay? Then step 3. What is step 3? Short sales. Last bench girls, you are not participating. I think I have to come. I'll come. Step 3, short sales. What is the formula? Standard turnover minus actual turnover of indemnity. What is standard turnover? What is standard turnover? 2,20,000 plus 10%. 2,55,000, 25,000 plus 10% minus what is actual turnover in that period? 67,500. 1,80,000. Step 3 is also done. What is step 4? Step 4, GP last equals to 1,80,000 into 20%. 36,000. Next one, step 5. This is important. Admissible additional. Point number 1. How much actual additional expenses? Increase in working capital means day-to-day expenses only, no? How much? 12,000. Number 2, sales due to additional expenses. Whether they are given in the question? All of you in the class, I will highlight one sentence now. Please tell me meaning of that sentence. Anybody in the class? What is the meaning of that sentence? Reduced turnover avoided. అంటే సేల్స్ తగ్గడాన్ని ఆపగలిగాం. That means, yeah, I can say increase in sales. How much? 30,000 into GP ratio 20%, 6,000. And number 3, actual additional expenses into what is net profit? 36,000 plus, there is given the question 70 by net profit plus total standing charges given in the question. What about total standing charges? No data about total. Assume it as insured or total. Okay. That total means insured plus uninsured. They have not given data. Uninsured 0. Then insured how much? 72. Here also 72. Whichever is lower? 6,000 is admissible additional expenses. Then step 6. Step 6 is gross claim equals to GP lost plus admissible additional expenses minus how much GP lost? 36,000 plus 6,000 minus SSC, where it is? Yeah, 4,500. 30. Okay. Next one, step 7. Insurable value equals to adjusted annual turnover into GP ratio. Look at the question. What is adjusted annual turnover? 6 lakh into actually plus 10%, no? Yeah, plus 10% into 20. I think you are understanding why I am adding 10%. Yeah. Sorry? So last step number 8. What is that? Net claim. What is the policy value? 1 lakh. Insurable value? So policy value is less than insurable. Under insurance we have to apply average class. So net claim equals to P by I into Z. What is policy value? 1,08,000. Insurable value 1,45,000 into gross claim 37,500. That is the answer. Okay? Yeah. Please copy it, then we'll solve previous exam questions. Just if you remember the steps, you can answer it. If you are done with these 2 questions, please try to revise those 2 questions. Then you will get idea about how to solve this kind of questions. So I'm applying the trend in two situations. One is standard turnover, second one is adjusted annual turnover. Yeah, please check these 2 questions and answers. First question number 8 and then question number 9. This is the recent examination question, December 2025. Just let's look what is asking and what is the requirement of the question. A fire occurred in the premises of Mrs. Bright on 25th May 2024. As a result of fire, sales were adversely affected up to 30th September 2024. That means what is indemnity period? 25th May to 30th September. The firm had taken loss of profit policy. Policy value 3,50,000. There is an upward trend. 10% upward trend. What to do the 10% apply? Where to apply? Standard turnover, adjusted annual turnover. The firm, 1 minute. Yeah, the firm incurred additional expenses. How much additional expenses? 30,000 to maintain the sales. So there was saving of 5,000 in insured standing charges. So SSC is 5,000 plus insured also 5,000. They'll give you insured. There's a 5,000 is SSC, and then they are giving some data. Actual turnover, that is indemnity period turnover, and then turnover from 25th May 23rd to 30th September 23rd. That means standard turnover plus we have to apply how much percentage trend? 10 percentage. Net profit of last year 2 lakhs. Insured standing charges 1,75,000. Total standing charges 3 lakhs. Turnover means sales of last year 15 lakhs. Turnover of 15. What is the last one? Excellent. Adjusted annual turnover plus 10%. You are required to calculate loss of profit, assuming that entire sales interrupted so and so. Yeah. What is the last point? Assuming that entire sales during that period are. We are taking an assumption, no, in the previous question. Sales due to additional expenses are nothing but sales in that period, total sales. Same question for 7 marks. Very easy, no? Nothing difficult. They are giving everything. Let's try. Yeah. You just write the synopsis of the question. Write down December 25 exam question. Yeah, no need to write the question, just answer it. Question రాయొద్దు, just answer చేయండి. Do you want to write the question? Yeah, your wish. Quick. That is December 25 exam question. If your question is done, start answering. Yeah. Okay, dear students, so we are discussing recent examination question. A fire occurred in the premises of Mrs. Bright on 25th May 24. What is this? Date of fire. A result of fire, sales were adversely affected up to 30th September 24. What is this date? 1 minute, 1 minute. Yeah, what is indemnity period? 25th May 24 to 30th September 24. And the firm had taken loss of profit policy. I think you know what is the treatment of loss of profit policy. We have to apply how many steps? 8 steps. Step number 1 is gross profit. It's depend upon net profit or net loss. If it is net profit, gross profit equals to net profit plus insured standing charges. If it is net loss, yeah, everybody please be on hold. Last and second person stand up. Close your books and give me the 8 steps in case of calculation of insurance claims for loss of profit policy. We have totally 8 steps. Tell me one by one. Before that, close your books. Start. Great. Next person, the last, yeah. Yes, yes. Superb. Great. Yeah, you are absolutely correct. People who don't have knowledge, they laugh, ignore about. Actual turnover of indemnity period. That is gross profit loss. Step 3 into step 2. Expenses. Mm. Great. Insured standing charges by. Great. Step 6. Cross claim. Great. 4 means gross profit lost. 5 means administration expenses minus SSC means savings in standing charges. Great. Step 7. Insurable value equals to. Yeah, auto into GP. Yeah. Step 8. How can you say that is full or under insurance? Higher than or equals to? Great. Yeah, got it. Superb. Please be seated. Nice. I think you got it what I am trying to convey. Yeah, please be seated. So, step number 1 is calculation of gross profit. Step number 2 is GP ratio. Step number 3 is short sales. Step number 4 is gross profit lost on short sales. Step number 5 is admissible additional expenses. Step number 6 is gross profit lost. Gross claim. Step number 7 is insurable value. Step number 8 is net claim. Net claim, it is full insurance. Net claim equals to gross claim. Under insurance, yeah, that is P by I into Z. Policy value by insurable value into gross claim. Correct? No? Now come to the question again. The firm had taken loss of profit policy. What is this 3,50,000? Yeah, that is policy value. Okay. There is an upward trend of 10% in sales. I told you very clearly, you have to apply this trend in two calculations. One is standard turnover, second one is adjusted annual turnover. If they are telling us in upward, I have to add, downward, reduce. So what they are telling us, upward means I have to add. Don't always add. Look at the question, what they are telling us. The firm incurred additional expenditure, how much? 30,000. Some extra data, savings in standing charges, 5,000. Following info is available. Actual turnover from this period means that is, what is in SAI will use, no? Next one, turnover from 25th May 23 to 30 September 23. What is this? Standard turnover. What is standard turnover? 6 lakhs plus 10%. Next one, net profit for last year, 2 lakhs. Where I will use this net profit? First, step number 1. And insured standing charges, 1,75,000. Total standing charges, 3 lakhs. Turnover of last year, 15 lakhs. What is the last one? Adjusted annual plus 10%. Okay. You are required to calculate the loss of profit claim amount, assuming entire sales are during because of additional expenses. We have to use this in case of calculation of step number 5. Okay, just have a look. We have to apply 8 steps as it is. So you help me out, my dear students. What is step 1? Gross profit. Tell me, what is the last year profit or loss? Is it net profit or net loss? Then what is the formula? Gross profit equals to net profit plus insured standing. How much net profit? Insured standing charges? That means 2 lakh plus 1,75,000. So therefore, gross profit equals to 3,75,000. Next one, step number 2. What is step number 2? GP ratio. What is the formula? Gross profit by sales into, what is gross profit? Last year sales. Sales means turnover only, no? How much? 15 lakhs into 100. Sorry? 25%. Till now clear everybody up to here. So what happened? So we just found out gross profit by using net profit plus insured standing charges. In step number 2 we found out gross profit ratio and then come back. What is step 3? Short sales. What is the formula? Standard turnover minus actual turnover of indemnity. What is standard turnover? 6 lakh plus 10%. Nothing but 6,60,000 minus what is actual turnover? How much? 1,75,000. 4 lakh. So now we got short sales. Next, step 4. What is step 4? Yeah, GP lost equals to step 3 into step 2. Short sales into GP ratio. How much short sales? Just now we found out 4 lakh into GP ratio. 1 lakh. This is gross profit lost. Then step 5. Admissible additional expenses. What is the first point? Actual expenses, actual additional expenses. They are telling us 30,000. Second one, sales due to additional expenses into GP ratio. They are telling us assume total sales in this period or additional sales, nothing but 1,75,000. So 1,75,000 into 20%. 25, 40. What is this sales due to into GP? Step number 3. Actual additional expenses into what is net profit? 2 lakhs plus 1,75,000 by 2 lakhs plus 3 lakhs. 20. Whichever is lower. Therefore, AAE equals to 22,500. So next, step 6. Cross claim equals to, please. Gross profit lost plus additional admissible expenses minus how much GP lost? 1,21,000 plus 22,000 minus 5,000. 1,13,850. And step 7. I have to check insurable value equals to auto into GP. So what is the auto value? 14 lakh plus 10%. Nothing but 14 lakh plus 10%. 14 lakh plus 10% into 25%. 3 lakh. So step 8. Net claim. Before that we have to check what is policy value. 1 minute. 3 lakh. Policy value equals to 3,50,000. Insurable value. Therefore, what I have to write? Tell me which is more. Therefore, policy value is less than. This is under insurance. We have to apply. What is average class? P by I into Z. What is P? 3 lakh 50 by into what is the answer? 1 lakh 1,20,000. 126136. Yeah, please come. So this is very easy question. Now tell me what is difficult in it. So similar to our material questions only. Who have not recorded, please copy. Done, sir, everybody? Yeah. So with this loss of profit is done, you tell me which is easy, loss of stock or loss of profit? For me, loss of profit is very easy because just I have to blindly follow 8 steps. That's it. But you have to remember what are the 8 steps. What is called standard turnover, what is called adjusted annual turnover, what is called indemnity turnover. You have to remember all those things. Yeah, let's go back to the again loss of stock. There, what is the normal procedure? What we did? First, we have opened memorandum trading account. We're new student. Yeah. Memorandum trading account. Yeah, please. So we have opened memorandum trading account. Memorandum trading account is nothing but a current year trading account. So if you open current year trading account, so hi, memorandum trading account. If you open memorandum trading account, see we have two balancing figures. Debit side, gross profit, credit side, stock on date of fair. So but we cannot find out both of things. They have to give gross profit ratio. If they give gross profit ratio, then I can easily find out stock on date of fair. Otherwise, what I have to do? I have to open last year trading account. Why should I open last year trading account? To find out last year gross profit. How will I get last year gross profit? I have to write on debit side to opening stock to purchase all debit items. Credit side, sales closing stock. Then you will get the balancing figure as gross profit. Hey, look at me. And from that I will find out gross profit ratio. What is the formula for it? Gross profit by sales into 100. Just now we got gross profit in trading account. Now take that figure. And you have sales as well. Then you will get gross profit ratio. Take this ratio in memorandum trading account. You will get gross profit obviously. The balancing figure would be stock on date of fire. But your main agenda is not to find out stock on date of fire. You have to find out insurance claim. Venkat Raju. Yeah, you have to find out insurance claim. It's depend upon full insurance or under insurance. How can you say full or under insurance? You have to compare policy value and stock on date of fire. Don't compare with actual loss, okay? How will you get actual loss? Actual loss is equals to, hey, look at me, stock on date of fire minus scrap value. Okay? You have to compare policy value and stock on date of fire. Always your policy value should be higher. That is called full insurance. Otherwise, under insurance. If it is full insurance, what is the formula? Net claim is equals to actual loss. No, there is no formula at all. If it is under insurance, nothing but under insurance means for policy value is less than stock on date of fire. In that case, you have to apply average class. What is the formula for average class? A by S into P. Nothing but actual loss by stock on date of fire into policy value. Okay, that's what we covered. After that, we covered few more problems. What are those problems? If we have to apply last year ratio on current year, there should not be any change in purchase price or selling price. If we changes, we have covered two problems. I think you know very well. After that, we came to the loss of profit when we have done all the problems, including examination question, which is December 25 examination paper. I think you are perfect now. Yes? Yeah, you can please be seated. So, in loss of stock, simply what we did, we have taken last year gross profit. Where is bro? Yeah, we have taken last year ratio in current year. Now everybody listen. For example, last year I purchased, my total purchases are 100 rupees, total sales are 150 rupees. What is gross profit? 50 rupees. GP ratio 50 by 150 into 100. Yes, please. 33.3333%, right? Yeah. So current year, hello, last 3% get out. Current year, total sales 600. What is current year gross profit? We will apply 600 into 33.333%. 1, nothing but 200 rupees. Correct? No? Now listen. For example, in last year, I purchased 10 goods. In last year, I purchased 10 goods, okay? Out of 10 goods, 4 goods became outdated, or they may be partially destroyed, or there may be some problem in 4 goods, okay? That means I sold 6 goods, each good for 6 into 15, 90. These 4 goods for 4 into 11, 44. So if there is no such kind of that loss, if there is no such kind of destroy or accident, if there is no outdated, then my sales would be total 10 into 15, 150 rupees. Unfortunately, my sales are only 134 because of that outdate of some goods. Outdate is technically called as obsolete. Obsolete means outdated. So my point is, in this case, what is the cost? For example, 100 is cost. So what is my sales value? 34. Then gross profit means 34. My question is, how can I apply this rate in current year? That is not correct. Why my profit is less in last year? Because of these obsolete products or damaged products. Are you getting my point? That's why I cannot take this percentage in current year directly. That is not at all correct. See, for example, in your CMA foundation, due to your personal reason, you have spent only 10 days. You got 52% marks. How can I take that percentage to enter? I cannot say you should get 52 only. You got 52 only for 1 month preparation. Here we will give you 3 months, no? Your prediction should be 60 or 70%. Here also similarly, I cannot take this percentage in current year. That means in last year or current year, if there is some products which are damaged or outdated, in that case, then how to find out loss of stock? This outdate or damage is called abnormal loss. So already I told you in beginning of the chapter we have 3 concepts. Concept number 1, loss of stock. Concept number 2, loss of profit. Concept number 3, that's what I am going to start now. So you will get full clarity in one problem, that is question number 5. Very, very important. So please listen very, very, very carefully. On 1/4/2021, godown of Y Limited was destroyed by fire. The records of company revealed the following. What is the fire accident date? 1/4/21. They were given some data. Stock on 1/1/21. Nothing but opening stock of current year, closing stock of last year. Stock on 31, I'm sorry, what is this? Opening stock of last year. This is closing stock of last year and opening stock of current year. So purchases last year, no. Yeah, make it 0, 0. Last year 20 only, no? Current year 21. So last year purchases 3,10,000. Last year sales 4 lakhs. Next one, current year. Completely mistaken the question. Then there may be, then this is 1,422. Yeah, correct. Then don't change these figures. Purchases from, that means this is last year opening stock. Yeah, now it is perfect. Purchases, current year purchase, current year sales. Now everything is right. Yeah. Now this paragraph is the hero of this question. Very, very important. What happened? In valuing closing stock of 2021. That means they are talking about last year closing stock. So in valuing closing stock of 2021, what happened? Underline or highlight this point. 5,000 was written off, whose cost was 4,000. That is the hero of this question. So what is the meaning of that sentence? So there are some goods. The original cost is how much? 4,800 is the cost. Those goods, yeah, please. Those goods may be outdated. So they are returning off from books of accounts. How much they reduced? 5,000. Written off means reduced. What is the cost of goods? 4,000, but they reduced extra amount. For example, this is the good. This became obsolete. Pakan badastunnan. What is the cost actually? 4,000. How much I have to reduce? 4,800 only, but I reduced extra amount. How much extra I reduced? 200 is extra reduced. Next one. Part of this stock was sold in, dintlo part of the stock was sold in 2022. We will discuss this point later. Okay. So except this, remaining is very normal question, just like whatever we covered in our previous classes. So what is the highlight of this question? In this question, there are some amount of abnormal goods are there. Are you getting my point? Now everybody observe. So I will explain. What is the question number? Question number 5. What is the step number 1? I have to open memorandum trading account. Yeah, before that, let me open trading account. I have something to work out here. Trading account. Okay. So normally, what is the format of trading account? 2 opening stock, 2 purchases, 2 wages, credit side, buy sales, buy closing stock. But what happened in current year, that means in last year, we have some abnormal goods are there. Whenever abnormal goods are there, you cannot directly write and find out gross profit, because that is not a correct gross profit to apply in current year. Whenever abnormal goods are there, so show it separately. I'll tell you how to show it. You tell me what is opening stock? Opening stock of last year? Sorry? You tell me, is this 75,000 normal or abnormal? Normal goods only. So I will write separate columns. Normal items, abnormal items, total. What is opening stock total? 70. The 75 is totally normal goods. Okay. Next what happened? Two purchases. What is the total amount? 3 lakh. So they are telling in our question, yeah. So total purchases, relatives, then why are you worrying? Purchases, total purchases 3 lakh 10,000. See, they are telling us in current year purchases some goods are abnormal goods. What is the cost of abnormal goods? 4,800. In total, my current year, but this is abnormal goods. Sorry, abnormal, no? 4,800. Remaining purchases are normal. How much? How much? 3 lakh. Calculate 3 lakh 10 minus 4,800. 3 lakh 5,200. Are you getting how I got that figure? Total purchases how much? 3 lakh. Out of it, one abnormal good is there. What is the cost of this abnormal good? 4,000. Balance is what? Balance is normal only. What is normal? 3 lakh 5,200. Okay. Next credit side. Normal, abnormal, total. By sales. What is current year total sales? 4 lakh. So come to the question. These goods sold in next year. That means current year no abnormal goods sold. Are you getting my point? In current year there is no abnormal goods sold. That means total sales are normal sales only. Abnormal sales 0. Okay. What else? By closing stock. What is closing stock? Sorry? 80,000. 80,000. Now listen. Now come to the question everybody. 1 second. Note చేసుకోండి సార్ ఇక్కడ వరకు. Yeah, my dear students, listen everybody. So come to the question, what happened? In valuing closing stock of 2021, that means they are discussing about this figure only, no? Am I correct? So what happened while valuing this stock? Already they reduced, how much they reduced? They reduced 5,000 instead of 4,800. Actually, they have to reduce 48. They reduced totally 5,000. That means in abnormal goods they reduced more. Correct? No? How much they reduced? Extra 200 extra they have reduced. That means their normal stock should be 80,200. Why 80,200? They have reduced extra from abnormal goods. Are you getting my point? This is the point where students feel difficulty. Actually, total stock is 80,200. Why 80,200? 200 is abnormal goods. The balance is 80,000. Don't add these two to get. So already they have done some mistake. I am rectifying that mistake right now. Are you getting my point? So as per their calculation, they have reduced 200 more in abnormal loss. Again, I am adding back the 200. To get 80, what I should do? I have to write normal goods as 80,200. Again, I am telling, listen very carefully. Total closing stock is 80,000 only. Okay, but what happened? They have reduced extra abnormal goods 200. Let me add back 200. I am reverse treatment I am giving. So to add 200, so what is the normal goods item? 80,200. Are you getting my point? That means total normal 80,200. Out of it I am reducing again abnormal. See, simply I'll give an example. See, for example, you have totally one apple box, you have 10 apples, okay? Out of 10 apples, really in practical scenario, 5 apples are completely spoiled. But you told me 6 apples are spoiled. As per your calculation, what is the reality? Out of 10, 5 is spoiled, 5 is good. You told me, sir, 6 is spoiled, 4 is good. Then what is the treatment I have to give? Out of 6 I have to reduce 1. Here I have to add 1. That's what I did here. I am adding this 200. So from where I will get? From this normal items only. Are you getting my point? Normal apples or I have to add plus 200. I am reverse treatment I am giving here. Are you getting my point? So of course this is not that much easy point. You have to involve in the question. Now tell me, balancing figure of normal items first of all. 4,80,200. Gross profit 1 lakh. Abnormal goods, that is reverse treatment, no? So we have to write here 5,000. 4,000. I will tell you, don't worry. Total do it. Yeah, you can ignore total. Actually here what you can say. Yeah, I'll tell you. Please listen very carefully. Little bit difficult question. So in this question what happened? There are some normal goods, some abnormal goods. Okay, let me write columns: normal, abnormal, total. Here also normal, abnormal, total. Yeah, first one, to opening stock. What is opening stock? 75,000 is the total opening stock. See, at the time of opening stock, there is no such kind of abnormal goods. Total goods are normal goods only. Then abnormal is 0. Okay. Next, what happened? Two purchases. So, from where I got this abnormal goods? From purchases only. What is the total purchases? 3,10,000. Out of it, what is the cost of this product? 4,000. That is abnormal. Balance 3,05,200. Okay. Then any direct expenses are there? No. Credit side, buy sales. Total sales 4 lakh. There is no abnormal goods sale in current year. Total sales are normal sales only. How much? 4 lakhs. Clear? By closing stock. What is closing stock value? 80. Already they have done mistake in this closing stock calculation. What is the mistake? Original number of apples spoiled are 5 only. They have recorded as a 6. That means they have reduced more from abnormal loss. Are you getting my point? Original loss of apples are 5. You recorded as a 6. I have to reduce one, no? Here also, how much I reduce here? I reduce 200. How will I get total? Total equals to normal plus abnormal. Abnormal is minus 200. Then how will you get 80,000? Here I have to write 80,200. Are you getting my point? Now let me find out gross profit of normal goods. Only look at normal goods. 4,80,200. This side also 4,80,200. Then what is the gross profit? 1 lakh is gross profit. Okay. Now look at abnormal goods. Switch on gal. See how to find out abnormal goods. This is the minus. We have to reverse treatment. You cannot say minus 200. You have to say plus 200. How to balance this? So, total is 48 only. Then what is the amount here? 5,000. What is this? This is gross loss. So here total gross profit 1 lakh. That's it. No, don't balancing this figure. Total gross loss 5,000. Don't balance total figure. 1 lakh only, no. Normal plus abnormal equals to total. Normal loss profit how much? 1 lakh. Abnormal profit how much? 0. 1 lakh plus 0, 1 lakh. Don't balance this total column. How I got this 5,000? Normal plus abnormal. 5,000. Clear? Yeah, please do copy. Not yet done. Memorandum is pending. You have to practice, then only you will get full clarity. So we should not balance total column. How I got this 1 lakh? 1 lakh plus 0. How I got this 5,000? 0 plus 5,000. Normal plus abnormal. I think you got this calculation. This should be very clear. Yeah, Hema, do you understood this problem? Yeah, then please stand up. Yeah, thank you. Then you tell me, my dear students, now we have normal goods gross profit, abnormal goods gross loss. Use your common sense if you have. How to find out gross profit ratio? Shall I take normal or abnormal goods? Normal goods only. So then gross profit ratio equals to, what is gross profit on normal goods? 1 lakh by what is total sales on normal? 4 lakh into 100. Great. Gross profit ratio 1 lakh by 4 lakh into 100, 25%. Done, sir? Let me open memorandum trading account. Nothing but current year trading account. Last bench boys, what happened to you? Hello. Excuse me. Good morning. So here also same. Again, don't write. Please listen everybody. Normal, abnormal, total. Two opening stock. Opening stock means last year closing stock only, no? What is last year closing stock? 80,000, 200, 200, 80,000. Am I right? Next, what is current year purchases? 70. There is no outdated item in current year. That means total goods are normal goods only. Next one, buy sales. Total sales how much? 1 lakh. But there is some abnormal goods sold. Come to the question. What happened? Part of this stock means outdated stock, sold in 2022 at a loss of 400. Original cost is 2,400. So cost is 2,400. Last 400 means what is sales price? 2,000 is sales price. So out of total sales, 2,000 rupees sales are abnormal sales. That means normal sales are 98,000. And then by closing stock, here 2 gross profit. My dear students, so they are telling in the question only part of the goods are sold in abnormal items. What is the total cost of goods abnormal items? 4,000. Out of it they sold worth of 2,400. Balance how much? Still they are in closing stock. Are you getting my point? So in closing stock, abnormal good stock is known value 2,400. So what is gross profit ratio? 25%. That is only for normal goods. Apply on normal goods. 98,000 into 25%. 20. That is only for normal goods. Close normal goods, then you will get a stock on date of fire. 1 lakh. So how I got this figure? So I applied this gross profit ratio in current year. I got this figure. Who asked you to total? I need balancing figure. 80. So how I got this figure? Normal sense, by applying previous year gross profit rate. But I cannot apply that gross profit rate on abnormal goods because that rate is only for normal goods. So anyway, what is the requirement of the question? You need to find out stock on date of fire. What is normal goods? 81,700. Abnormal goods 2,000. Then total it. You got the answer. Total this 281,700 plus 24. 84,000. This is the stock on date of fire. This is the required figure. Remaining you can balance it if you want that figures. But I need this figure. What is my main agenda? Finding out stock on date of fire. I got it. How I got this figure? I got this amount by using gross profit rate. I got this figure actually by using calculation. Why? Because total abnormal goods are 4,800 rupees. Out of 4,800, what happened? Some goods are sold. Sold value how much? 2,400. Therefore, closing stock equals to 4,800 minus 2,400. Then 2,400. That's how I got it. Okay. Please do copy. Not that much easy. Very, very difficult question. Very difficult question. You have to put a pen. how we got this figure? 98,000 into 25%. How I got it? 4,800 minus 2,400. But in your exam, you have to write working notes. How you got this figure in detail, like table wise. Yeah, time up. We'll meet tomorrow. Okay. So what is the discussion? Where are we exactly? Abnormal loss of goods, right? Yeah. So before discussing question number 6, let me just speak about yesterday's results for 2 to 3 minutes. It will be helpful to the online students because some people are writing in coming soon, or some people who are watching this class already they have filed in yesterday's result. That is okay, no issue. So listen, first of all, already I told you several times, CMA is completely changed their examination question paper pattern. So previous attempt papers are completely conceptual, and if you observe pass percentage is very decent and good pass percentage. That means whenever paper or a little bit difficulty or not comfortable, at that point of time valuation will be liberal. So very good pass percentage. I think that is more than last year, last time pass percentage. If I am not wrong, subject to correction. That means you have really have concept. Definitely you can get good marks. Okay, and so many of our online students, they have cleared their CMA into both the groups. Some people cleared single group, and so many students who has followed our online classes or YouTube classes, they have cleared their groups. And so many online students, they are literally they're eagerly waiting for our online classes, but you have very wonderful opportunity. So all the faculty who are teaching to you, they are available at all point of time. If you open my mobile phone, at least 10 to 15 unread messages related to next batch or subject. That means because non-availability of our team, but for you, you have very great opportunity. You have all the faculties are available here. You may not identify what is the capability of that faculty, but believe me, my dear students, all the faculty who are teaching to you are simply superb. So that's proved in yesterday's result. Of course, in CMA final, for sure, number of students coming to the offline is very less. So 90% are online, that is okay. But coming to CMA inter, normally students are always go for offline batches. Still, who are opting for online, they are only choosing our classes. That means you have very great opportunity. So whatever the team is teaching you all subjects is simply superb. Just to blindly follow them. Okay, and already I told you, I think majority we golden opportunity with us. In between one more attempt is there. So that's why you can get more clarity. Even we can analysis all the previous papers as well. And already I told you, even for your group 2 batch students as well. So for clearing, I'll just open CMA inter pass percentages. Definitely group 2 pass percentage will be always higher than group 1 pass percentage. I told you several times, even I told you already also. In result, I'll open that particular statement. As per my promise, I'll open I think it is not available with me right now, but still. December 21. Have a look. Group 2 31.76 when compared to group 1. So always it is the normal practice. Group 1 is also easy. The problem is people will not listen all the classes seriously. That is the problem. So still ball is in your court. So you can comfortably listen all the classes because batch is started just now. Okay. Yeah. So let's come back. We don't want to waste your time. So we are discussing insurance claims. So just let me recap entire chapter. In insurance claims, totally we are going to cover three concepts. Concept number one is loss of stock. Number two is loss of profit. Number three is abnormal loss of goods. So we have covered loss of stock policy. So in loss of stock, so in loss of stock, so firstly we have opened step number one, memorandum trading account. So memorandum trading account means current year trading account. So we have opened memorandum trading account, that is for current year. Current year means current year beginning to the date of fire accident. So if you open memorandum trading account, what is going to happen? You will have opening stock, purchases, sales, but you will not have closing stock, you will not have gross profit. If they are given gross profit rate, directly apply on sales, you will get a stock on date of fire. And remember one thing, when you are applying gross profit ratio also, look at whether they have given at cost or sales. If they have given at cost 50%, on sales 33.33. If they have given on sales, apply the trade directly. Okay. If they have given on cost 33.33, on sales how much? 25. If it is on cost 25, on sales how much? 20%. Okay. Next one. For example, if they have not given gross profit ratio, what we have to do? We have to open trading account. Trading account of last year. What is the purpose? Why you are preparing this trading account? To find out gross profit. You know, opening stock, purchases, all direct expenses if any. Credit side, sales. And closing stock is also available. So balancing figure would be gross profit. From that we will find out gross profit ratio. What is the formula? Gross profit by sales into 100. Then we will get some ratio. Apply this ratio in a memorandum trading account. Then you will get a stock on date of fire. Then they will give you a scrap value also. Then actual loss equals to stock on date of fire minus scrap value. Then at final outcome is insurance claim or net claim. It is depend upon full insurance or under insurance. If it is full, how can you say full or under insurance? You have to compare policy value, stock on date of. If your policy value is more, full insurance. If your policy value less, under insurance. If it is full insurance, your answer is actual loss. If it is under insurance, we have to apply average class. What is the formula? A by S into A for actual loss, S for stock on date of P for policy value. Okay. So while answering this kind of questions, already I told you, you can use this format only if there is no change in purchase price and selling price. If there is change, you know how to deal with that question. And compared to the concept number 2, loss of profit. There simply we have to apply 8 steps. Step number 1, calculation of gross profit. It is depend upon previous year net profit or net loss. Net profit, if it is net profit, gross profit equals to net profit plus insured standing. If it is net loss, gross profit equals to insured standing charges minus net loss into insured by total. Total means insured plus. For example, in examination, they have not given uninsured. Assume it as a 0. Then total will be insured. Next, step number 2, calculation of gross profit ratio. What is the formula? Gross profit by sales into 100. Then step number 3 is short sales. Standard turnover minus actual turnover of indemnity period. Step 4, gross profit lost equals to short sales into 3 into 2. Step 5, admissible additional lower of the 3. Number 1, actual expenses. Number 2, sales due to additional expenses into. Sir, in question they have not given sales due to additional expenses. Then assume it as a total sales in indemnity period or due to additional expenses. Number 3, actual expenses into net profit plus insured by net profit plus whichever is lower. And step number 6, gross claim equals to 4 plus 5 minus SS. 4 means GP lost, 5 means admissible additional expenses, SSC means savings in standing charges. Step number 7, insurable equals to auto into GP. And last one, net claim. Net claim is equals to, it depend upon full insurance or How can you say full or under? If your policy value is higher than insurable value or equals to, that is full, otherwise under insurance. If it is full insurance, what is the formula? Cross claim will be the net claim. If it is under insurance, average class. What is average class? P by I into Z. Policy value by insurable value into cross claim. And points to be remember, you have to apply trend rate in two calculations. Standard turnover, adjusted annual turnover. Then we came to the concept number 3, abnormal loss of goods. We have covered question number 5 also. Okay. What happened in question number 5? We have to show normal, abnormal separately. Sir, why separately? In last year there is some abnormal goods. If you are taking in single item, take a single item, what is going to happen? What is going to happen? Definitely, if you apply that rate income, that is not a correct rate. See, for example, inter first year or second year, let's compare. In inter first year, you have some serious health issue. You spent only 20 days on preparation. You got 550 or 500 marks, and you cleared your inter. See, I mean, normally MEC or MPC, whatever it is, plus 1 completed. In plus 2, you are all perfect. Now, what should be your target? 500 only? No. How can I take a percentage here? In first year, you have applied only very short span of time. Here also same. In previous year, we sold some abnormal goods. Literally, I can say they are not good. If you are taking all as sales only, that is not correct to apply that rate in current year. That's why let's separate normal goods, abnormal goods. We have to take only percentage of normal goods in current year normal goods. Let's find out separately closing stock of abnormal goods. Let's add it. That's what happened in question number 5. And similarly, many students asked me this paragraph. Just I'll explain orally what happened in valuing closing stock of year 21 or 22. 20, 21. What happened? 5,000 was written off. Written off means they have reduced. Already they have reduced because of they are not good goods. They are not normal goods. Whose cost was 4,000? First of all, what happened? For example, these two goods are abnormal goods. Pakan medicine. That is correct. I have to reduce my closing stock figure also. What is the cost of these two products? 4,000. But what I did? I reduced to 5,000. That is compulsory wrong only. Extra I reduced to 200. That is not correct. I have to give reverse treatment for it. I have to add back. Here we are doing an opposite side. No, I am writing minus 200. That means what happened on closing stock side? Normal, abnormal, and total. Total is how much? 80,000. But what happened? This 80,000 is extra 200 reduced from abnormal goods. That means normal is how much? 80,200. Okay? Yeah. So, come to the next question. Ignore about question number 5. Come to question number 6, everybody. First, read the question. I'll give you time. Read and understand the question. Everybody. Ignore about question number 5. Yeah. First bench, first student, can you please read the question for me? Question number 6. 6 only. Yeah. This is examination question. Now Akka will read June 2015, 2019, 2016 of December. Yeah. November 30th. 9th and September. Amma. Actually, we have 12 months. Tell them everybody. January, February, March, April. Tell to her May. Again January will start. Okay. Yeah. Come on. Yeah. What is the date of 5? 30th November. No, not November. 30th September. Yeah. Okay. They're asking you to find out insurance claim. Yeah. Continue. First of all, you tell me whether they are following calendar accounting year. Accounting year only, no? Then tell me what is current, what is previous year. Previous year is 1 4 21 to 31st March. Current year 1 4 22 30th 9. Super. Yeah, continue, Amma. అలాగే నేను చదువుతాను. Stock at cost on 1/4/2021 75. What is that? Last year opening stock. That means last year closing and current year opening. Next one. That means last year purchases. Next one. That means last year sales. Next one. That means current year purchases. Next one. Yeah, current year. For example, if this is not part of your question, answer is very easy. We will open memorandum, trading, and we'll find out insurance claim. But they are telling something. No, Akka will read. Please listen carefully. Yeah, please. Wait. When it is happening? 31st March 20. That means last year closing stock valuation. What happened? Last year closing only, no? Yeah, continue, Amma. Obsolescence means outdated. Yeah, continue. Stop. So this sentence is very, very important. And highlight that sentence, everybody, in your workbook, and tell me what is the meaning of that sentence. What is the meaning of that sentence, dear students? Huh? What is the meaning? 12,000 rupees goods are abnormal goods. They are waste products. What is the cost of that products? In previous question, cost 4,000. How much we reduced in previous question? But in this question, we reduced only 50%. This is also wrong. Are you getting my point? In question number 5, what happened? We reduced more. That is wrong. That's why we add back 200. In this question, what happened? We reduced. That means we have to reduce more. How much I reduce? 50% means I have to reduce 6,000 more. Are you getting my point? In question number 5, closing stock abnormal goods are 4,800, but they reduced to 5,000. That is not at all correct. In this question also, abnormal closing stock value 12k, they reduced to only 6,000. I have to reduce another 6,000. Okay? Yeah. Next one. Continue, Amma. That means in next year, same as previous problem. What happened? These goods means abnormal goods. Okay. That means she is talking about next year. Let us first complete current year trading account. Every one of you, please help me. Don't write anything. What is the question number? 6. For these problems, we have to first start with trading account. Yeah, tell me what to write. Normal, abnormal, total. This side as well. Normal, abnormal. Yeah, we have to write firstly to opening stock. So what is opening stock? Tell me where it is abnormal as in current year. That means in year beginning there is no abnormal. How much? 70? This so total 75 or normal goods only. Abnormal are 0. 2 purchases. How much purchases? 5,07,000. Out of 5,07,500, previous year, current year purchase. So you are telling me you have to tell previous year purchase 5,07,500. Okay. Total purchases 5,07,000. But unfortunately, out of these total goods, these 2 goods are abnormal goods. What is the cost of these 2 goods? As per question, 12,000 is abnormal. Tell me balance. Four lakh. So do you got it? How I did this calculation? Total purchases are 5,07,500 out of abnormal. Same as question number 5. Nothing has been changed. Any wages, direct expenses, carriage inward, anything? Then in current year, total sales, tell me how much? 6 lakh. But there is no abnormal sales in current year. They are in next year. Am I right? Yes. By closing stock. Tell me what is closing stock of last year? 1 lakh. But out of 1,04,000, what happened in abnormal goods? Total goods cost 12, but they reduced only. That means still we have to reduce. That means here 6,000. This is 98,000. You should add these two to get. In previous question, what happened? We deducted more. That's why we add back. Okay, exactly opposite. That is the difference between question number 5 and 6. ఇక్కడ ఎందుకు ఇక్కడ మైనస్ రాశాను నేను క్వశ్చన్ నెంబర్ 5లో ఎక్స్ట్రా తీసాను కాబట్టి రాశాను. In this problem what happened? We have reduced it less only. Still we need to reduce more. Are you getting my point? Out of 1 lakh 4, these all are not correct goods. 6,000 are abnormal, 98 is only normal. That's what we are trying to convey. Then tell me, to gross profit, only close normal goods. Tell me profit direct balancing figure. Don't tell me total. 1 lakh. What about abnormal goods gross loss? 6,000. So total gross profit, total gross loss. Okay, what is the gross profit ratio then? Gross profit ratio only on normal goods. What is gross profit of normal goods? 1,57,000. 20. Sir, are you clear with this calculation? Otherwise I'll explain again and again and again until you get it. Try to compare question number 5 and question number 6. In question number 5, here I have written minus 200. Here I am recording just 6,000. Why? In that question we have reduced more. That's why I am giving opposite treatment. Here we have did only half. I have to write still 6,000. Okay, now what is the next step? I have to open memorandum trading account. Again same, normal, abnormal, total. Bolo? Opening stock means previous year closing stock only, no? How much? 98, 6, 1,04,000. Tell me current year purchases. 2 lakh. All are normal or abnormal? All are normal. Buy sales. Total sales how much? 68,000. But some abnormal sales are there. Yeah, come to the question. What happened? In May 22, 3/4 of this stock had been sold at 90% of original cost. Now I am giving you time, and first I'll ask you some questions. Tell me, what is the total abnormal stock cost? 12,000. How much they are selling? At, can you tell me sales price? My dear ChatGPT, open your calculator. Where is your calculator? In home. Okay. Huh? So what is the total cost of abnormal goods? 12,000. What they are telling us, our sales are out of 12,000, we sold 3/4 at 90%. How much? 8,000. That means out of total sales, 8,100 are abnormal sales. What is the normal sales? 3,60,000. To gross profit. This ratio should apply only on which? Only on normal sales. Normal sales how much? Into 25%. That means I have to apply only here. How much? 90,000. Then close only normal goods. 1 lakh. I should not apply that rate in abnormal goods. That ratio is only meant for normal goods. Okay. So this is the requirement of the question. But we need total closing stock. No. That means we need abnormal closing stock also. How to find out? Again come to the question. What they are telling us, it is now expected that the balance of the ultimate closing stock realized at same price. Same price means 90% only. That means closing stock of abnormal goods equals to out of 12,000. What is closing stock? 1/4 into 90%. 2,700. This is 2,700. This is our required stock on date of fire. Total it 1,20,700. That is the answer. Remaining you can ignore, no problem at all. Okay. So everyone please copy up to here and understand first of all. abnormal items. Yeah. Sir, if your answer is done, please open question number 5 and 6, revise once again. If you have any small doubt, just raise your hand. I will come to you. Yeah. Now everybody listen. So question is not yet done. What happened? They're asking insurance claims, right? So total stock on date of fire. How much? 1,20,700. What is actual loss? Actual loss equals to stock on date of fire minus scrap value. 1,20,700 minus what is scrap value? 14,400. 1,06,000. So what is policy value? They are not given in the question, huh? Then ignore with that loss. This is the answer. They have to give policy value. Yes, sir. So we'll have one or two questions more. I'll complete those questions tomorrow. Already I told you this weekend examination syllabus is total insurance claims. Marks may be 50 marks. Huh? Ah. Yeah, only insurance claims. Okay. Yeah, please be prepared for it. In examination also, weight is 7 to 9. We have solved the exam recent question paper also. Okay. Yeah. Bye. We'll meet tomorrow. Please look at all the questions and concept whatever we have covered till now in insurance claims chapter.
మీరు ఎందుకు వచ్చారండి? మీ ఇద్దరు ఏం అర్థమవుద్దని వచ్చారు? Okay, everybody come to page number 119, question number 7. A fire occurred in the premises of Mrs. Bad Luck Traders. What a good name. So what is the company name? Bad Luck Traders. That's why fire happened. Twice, not single, not once, twice fire accident. Twice means 2 times. So many, so much. Papa. During the accounting year 21-22, that is on 31st August 2021 and 30th November 2021, 2 fire accident dates. From the following particulars, calculate the claim to be large in respect of the goods lost by fire on the so-and-so date. So they are giving some data. First of all, let's calculate separately. Here we have to calculate 2 insurance claims. First claim is on 31st August. Second claim is on 30th November 20. Let's ignore the second claim. for a couple of minutes. Yeah. So first of all, tell me, is it loss of stock or loss of profit? Loss of stock only, no? Yeah. Point number 1. The stock as at 31st March 21 was 59,000. First of all, tell me whether they are following calendar year or accounting year? Calendar accounting year. So ignore about this fire accident. So what is date of fire as of now? 31st August. They are following calendar year, no? Tell me what is previous year? 1/4/21 to 31st, I'm sorry, 1/4/20 to 31st March 21. Current year 1/4/21 to 31st August 21. Okay? Yeah. Let's look at point number 1. The stock as at 31st March 21 was valued at 59,000. That means that is the closing stock of last year, at the same time opening stock of current year. And point number 2, the purchases from 1st April 21 to 31st August 21, nothing but current year purchases 3,45,000. The purchases from 1st September, this is about second, ignore it. And point number 4, sales for the period from 1st April to 31st August 4,71,000. Current year sales. This is about second claim, ignore. The company earns a steady rate of growth. Okay. So this problem we should not discuss right now then. Yeah, point number 1, question number 1 you can ignore. 7, this is not right time to discuss. We'll discuss this question later. This is not correct time. We need to discuss some more concepts, some more chapters, then we'll discuss. Question number 1 you can ignore completely. Apart from it, remaining all problems are done, if I am not wrong. Yes? Abnormalness problems also done, no? Now, let's solve previous 5 exams question papers. Okay? Then you will feel confidence about this chapter. Yeah, everybody please help me out. I'll just open. Already we have solved recent exam question paper. I think you remember this question, right? What is the question? Question number? Do you remember? 9. We have only 7 or 8 questions. We have only 8 questions. Yeah, 6B. Completed now this question? Yeah, let's go back one more attempt. June 2025, paper number 6. Hey. I think in this attempt they have not asked. Yeah. So look at 3A question. So little bit different question. So first of all, read the entire question. Everybody, let's do it. Yeah. So what happened to you? Come on. Yeah. On 30th March 2025, fire accident occurred in the premises of Mrs. Rajesh and Co. The concern had taken an insurance policy of 1,20,000 rupees. What is that figure? Policy value is 1,20,000. And next, subject to average class, from the books of accounts, the following particulars are available. First of all, dear students, tell me whether they are following calendar year or accounting year. Observing the question, calendar year only, no? Then I will not use pencil. You will answer entire question. Just write whatever I am saying. December. Yeah, write down June 25 question. No need to write the question. I will tell you how to write. June 25 question. Write down date of fire equals to. Everybody quick, including students who are in online. I hope you are able to understand what I am trying to convey here. Date of fire equals to 30th March 2025. And current year, thirtieth March. First of all, previous year is calendar year, no? 1/1/2025 to 31st December 25. Current year is 24, sorry, 24. Current year is 1/1/25 to 30th March 25. Hey, open now. So current year, previous year. Next one. Next one, purchases, sorry, stock. First of all, the following particulars are available relating to the period 1st January to 30th March. That means they are talking about current year data. Stock as per balance sheet as on 31st December 2014. 2020, that means that is previous year closing and current year opening. So how much? 1,91,200. You also write down. So previous year closing stock and current year opening stock. How much? 1,91,200. Switch off and switch on it. And again get back to the question. Purchases, yeah, very important point. What is the point? Purchases, how much totally? 3,40,000. But there is one point within the bracket. What is that point? Including purchase of machinery 60,000. You all know trading account is only for goods, not for assets. Okay, that means purchases means not 3,40,000. 3,40,000 minus 60,000. But many of your seniors, they have written 3,40,000. No, that is not correct. Trading account purpose is to finding out gross profit or gross loss on goods only. Are you getting my point? Then purchase means how much? 3,40,000 minus 60,000. 2,80,000. Yes. Next one, wages. How much total wages? 1 lakh rupees. Within the bracket something is there. Including 6,000 for installation of. They are capital expenditure, no? Again I have to remove it. Then wages is how much? 1 lakh minus 6,000. Only 94,000. And next one, sales. Sales totally 5,50,000. They have given something including goods sold on approval basis amounting to 99,000. No approval has been received in respective of 2/3 of goods sold on approval. Okay, we'll discuss that point later. Gross profit rate 20% on sales. Scrap value 24,000. You are required to compute amount of claim to be lodged. Okay, so everything is clear except point number 4. What is that point? About sales. What happened? Total sales how much? 5 lakh. So actually we sold some goods on approval basis. I think this point may be able to understand by the students who has already qualified their CAT, not CMA foundation or else CA foundation. There we discussed sale on approval basis. Let me just tell you within the 1 or 2 minutes. Within 1 or 2 minutes, listen. See, for example, I sold these goods to one of the customer. Okay. So previous year closing stock and current year opening stock is 1,91,000. Next one, purchases. How much purchases? 3,40,000 minus. Why we reduce 60,000? Because trading account is only meant for goods, not for assets. Therefore, we have to reduce 60,000 from that 3,40,000. Therefore, write down you also purchases equals to how much? 3,40,000 minus 60,000. 3,40,000 minus 60, 2,80,000. Correct? Yeah. Again, come back to the question. Wages. Total wages how much? 1 lakh. But already we discussed. So 6,000 related to machinery. We have to remove those wages. That means wages is equals to 1 lakh minus 6,000. So wages equals to 1 lakh minus 6,000 equals to 94,000. And important point, sales. What is total sales? 5,50,000. They are telling us including goods sold on approval basis amounting to 99,000. So actually we have given some goods to one customer on return or approval basis. Return or approval basis means if he really liked those goods, he will keep it with him, otherwise he will return those goods. Okay. So that value is how much? 99,000. So in the next point, no approval has been received in respect of 2/3 of goods sold on approval. That means out of 99,000 rupees approval sales, what happened? 2/3 not yet approved. That means 1/3 is approved, no? Approved 1/3, not approved 2/3. 1/3 means 99,000 into 1/3. They were already approved. No problem with this. But the problem is with the not approved goods. How much? 99,000 into 2/3. 60. They are not approved means they are not at sale, not at sales. That means I have to remove this figure from my total sales. What is my total sales? 5,50,000. Therefore, sales is equals to 5,50,000 minus 60,000. 66,000. 4,84,000. Okay. Yeah. And what else? Gross profit ratio they are giving directly. And scrap value 24,600. You are required to compute the amount of insurance claim. First of all, tell me, is it stock loss or profit loss? Stock loss. So here no need to open last year trading account. Why? Because already they have given gross profit directly. I can apply that gross profit in my memorandum trading account, then I will get a loss of stock. Okay. Yeah. Are you ready for it? Yeah, let's go ahead. Okay, sir, no problem. You can leave. Memorandum trading account. To opening stock. So already we recorded opening stock of current year how much? 1,91,200. Two purchases. Actually we have done some working note for purchases. How much? 2,80,000. Two wages. 94,000. By sales 4 84,000. 2 gross profit. 4,84,000 into 20% is how much? 96,000. Close it, you will get answer, that is stock on date of fire. 1,78,000. Actual loss equals to stock on date of fire minus scrap value. That means 1,78,000 minus what is the scrap value? 24,600. 1,400. So policy value how much? 1,20,000. Stock on date of fire 1,70,000. Therefore, policy value is less than. This is a, we have to apply net claim equals to A means by S means into P means you will get the answer. Yeah, whatever, that is correct. Okay, ignore about numbers, all this, just focus on concept. Okay, yeah. And let me go back one more attempt. December 2024. Same paper ID. June 25. Yeah, everybody can do it. Question number 6B, which is on your screen, including all online students. Please solve question number 6B. Very easy question, I think. On 10th December 2024, fire occurred in the premises of Chandu. All stock except to the extent of 2800 were destroyed. Nothing but what is that figure? Scrap value, that is remaining goods. Okay. Chandu values stock at cost less 10%. That is important. Stock was insured for 1 lakh. That is policy value. And then from the following information, first of all, what is the date of fire? 10th December 20. Look at the entire question. Is it calendar or accounting year? What is the last year then? 1st April 2023 to 31st March 2020. Current year means 1st April 2024 to 10th December 2024. They have given stock at 1423. Nothing but last year opening stock. At the same time, purchases in last year. Next one, sales in last year. Stock, closing stock of last year, opening stock of current year. At the same time, current year purchases, current year. So highlight of this question is, so they are valuing their stock at less 10%. That means what is opening stock of last year? What is opening stock of last year? That is already reduced. That means that is 90%. You have to make it 100%. That means 1,44,000 by 90 into 100. Say 1,60,000. Similarly, closing stock also. Closing stock is 90,000. So that is also reduced. That means 90,000 by 90 into 100. Say 1 lakh. Remaining is normal. That means you have to change opening stock and closing stock. Opening stock is 1,60,000. Closing stock is 1 lakh. Remaining is normal. Yeah, do it everybody. I'll help you out if you have any doubts, including online students. Sir, nothing difficult, sir. This purchases will become 1,60,000. This sales become 1 lakh. Remaining is normal. You have to open memorandum trading account and gross profit trading account. That's it. Last bench completed అండి. What is the answer? Correct. Yeah, you try it out, then yeah, you are correct. 84681. Yes. Yeah. Give a heading hire purchase system. Where is the another person? Okay. Yeah, fine. Listen very carefully. So already we have completed one important chapter, that is insurance claims. So this is also another important chapter. In each and every attempt, they are asking one question from this chapter for 7 marks. Every time they are asking one question, including in recent exam also. Every time they are asking one question for 7 marks. Hire purchase system, and very easy chapter. Very easy chapter. Much easier than in your insurance claims chapter. Much easier than insurance claims. See, listen. Before entering into all problems, all the solutions and all those nonsense, first of all, let's discuss in normal sense. Yeah, listen everybody. See, for example, I want to purchase a car. Okay. So, as of now, the car price is 12 lakh rupees. Now, I want to purchase 12 lakh rupees car. But unfortunately, nobody will maintain that much of cash physically. And one more thing, if I have 10 lakh cash also, so if I purchase by paying cash, that means I am completely foolish. So actually, if you observe in the practical sense in the market, 90% of vehicles are financed. Nothing but they purchased through EMIs. So for example, as of now, I'm holding only 2 lakh rupees cash. Still, I can get the car by paying this 2 lakh rupees immediately, and for the balance 10 lakh rupees, I'll pay in installments. That is called EMI. EMI stands for equated monthly installment. What is that? Equated monthly installment. Generally, in our practical scenarios, EMIs are every month. But in my chapter, in hire purchase system chapter, EMIs are on yearly basis. So first year, second year, third year, like that. Okay. So here the point is, what is happening? So I am selling this vehicle to you, not immediately through cash. So you are purchasing it through EMIs. That means one person is selling the asset, someone is purchasing that asset. See, the person who is selling that asset is called hire vendor. What is that? Hire vendor. Vendor means the person who is selling it. Person who is purchasing this asset is called hire purchaser. So in this chapter total we are going to discuss about 2 parties. One is hire vendor, second one is hire purchaser. Hire vendor means the person who is selling the asset. Hire purchaser means the person who is purchasing the asset on hire purchase system. So 1 minute. Yeah, fine. See, listen. First of all, why this concept is called hire purchase system? Can we call it as a EMI or something else? Why this name? So this name has a little bit history. Listen. See, for example, we purchased this car on hire purchase system. We paid 2 lakh immediately. So we have paid our first EMI, second EMI, third EMI, but we are not paying fourth EMI, fifth EMI. And what is going to happen? What is going to happen if you don't pay EMI? ఏం జరుగుతుంది? They will take back the car. Obviously, that is what going to happen in the practical life. Are you getting my point? See, if, for example, this car has been taken over by that hire vendor. Now, my doubt is, I have paid this 2 lakh rupees plus first EMI, second EMI, and third EMI. What about all this, my paid up money? Will they give back that money? 100% they will not give single rupee. They will say simply, you used that car, no? Assume it as a, I have given that car to you on lease, on hire. Hire is nothing but lease. So that's why, that means whenever you are purchasing one asset on EMI, so it includes both lease and purchase. So lease is technically called as hire. That's why this system is called hire purchase system. That means if you don't pay anything, they will take back that asset, they will assume it as a hire. Otherwise, that is a purchase. So the system is called hire purchase system. Who are the parties? Hire vendor, hire purchaser. Hire vendor means the person who is selling the asset. Hire purchaser means the person who is, that's it. Okay. Now use your common sense if you have, otherwise okay, no problem. See, what is the price of that asset? 12 lakh rupees. This 12 lakh is normal selling price of that car. So this original selling price is called cash price. So cash price means original selling price of that asset. That means if you want full ownership of that car, immediately you have to pay 12 lakh rupees. That is called CP. CP stands for cash price. No sir, I don't have the 12 lakh rupees cash. I will pay in installments. So all these installments I have to pay. So tell me, so if you add all these amounts, will you get 12 lakhs or less than 12 lakhs? Definitely more than 12 lakhs. You have to pay more. That means, for example, you are paying some 15 lakh rupees to that hire vendor. That means, what is the original cash price of that car? How much you are paying? I'll write it. For example, you are immediately paying 2 lakh rupees. This is called what? Down payment. What is that? Down payment. Down payment means amount you are paying immediately to the hire vendor at the time of purchase of asset. So my first EMI, second EMI, third EMI, fourth EMI. 3 lakhs, 3 lakhs, 3 lakhs, 3 lakhs. What is the total amount? 14 lakhs. What is the cash price? But how I am paying? How much extra I am paying? Do you think I am foolish to pay extra money to the hire vendor? 100% no. Then why I am paying extra money to the hire vendor? Definitely that is called interest. Are you getting my point? If I pay this amount at the beginning of that purchase of asset, he may invest that amount in somewhere else. He may get interest. That's why I have to pay extra 2 lakh rupees. If you look at the all my example, here I am showing you 3 figures. One is 12 lakhs, second one is 14 lakhs, third one is 2 lakhs. 12 lakh is called what? 12 lakhs is called cash price. 14 lakhs is called hire purchase price. What is that? Hire purchase price. This 2 lakhs is called
interest, this 2 lakhs. That 2 lakhs is called down payment. That means in the first session, still 10 minutes is not yet completed. I introduced it to you 4 terms. Number 1, cash price means original selling price of asset. Number 2, down payment. Down payment means amount you are paying immediately at the time of purchase of asset. Number 3, higher purchase price is the total amount paid by the higher purchaser to higher vendor. Number 4, interest. Interest means extra amount paid by the higher purchaser to the higher. So you please have a look. That means 2 lakh rupees we paid extra, no? How you got this 2 lakhs? 14 lakhs minus this 2 lakhs is called what? Interest. 14 lakh is called 12 lakhs is called. So my dear lovely students, you have given me a beautiful formula. Even I don't know what is that formula. Interest equals to higher purchase price. This is the first formula we are going to learn in our higher purchase system chapter. They may ask an MCQ by using this formula. They'll give you higher purchase price and they'll ask you CP, or vice versa. They'll give you this, they'll ask this figure. Okay, what is that formula? Higher purchase price, minus cash price equals to. Don't just muck up the formula. Try to understand what is happening here. Why this formula came. So it is extra amount paid by the higher purchaser. This is amount paid. This is original selling price. Are you getting my point? Now let me summarize the entire discussion. What is our chapter name? Higher purchase system. What is the weightage of this chapter? 7 marks. Who is the higher vendor? Person who is selling the asset. Higher purchaser means? Super. What is the meaning of cash price? Higher purchase price means total amount paid by the higher purchaser. Interest means extra amount. So what is the formula at the end? Super. Yeah, then please do copy. I'll dictate. Write down higher vendor. Higher vendor means person who is selling asset on hire purchase system. Person who is selling asset on hire purchase system. Next one, hire purchaser. What is the meaning of hire purchaser? Yeah, person who is
purchasing asset on hire purchase system. Number 3, CP. CP stands for cash price. What is the meaning of it? Original selling price of asset. Example, car price 12 lakhs. Next one, down payment. Amount paid by hire purchaser. To whom? To hire vendor. When? At the time of delivery of asset. Next one, hire purchase price. Hire purchase price. What is the meaning of it? Total amount paid by hire purchaser to hire vendor. ₹14 lakh. What is the next item? Interest. Superb. Interest. Interest means extra amount paid by hire purchaser to hire vendor. Nothing but 2 lakhs equals to 14 lakhs minus 12 lakhs. Therefore, interest equals to hire purchase price minus cash price. From this formula, can you derive higher purchase price formula? It will become what? Yeah, first tell me. Higher purchase price equals to, can I say CP plus interest? From this formula, can you tell me what is the formula for interest? Yeah, already recorded, no? Yeah, then CP, cash price, equals to higher purchase price minus interest. Done, sir? Yeah, write down some examples. Example number 1. Higher purchase price equals to 10 lakh rupees, comma, CP, CP stands for cash price, equals to 11,50,000 rupees. Interest how much? What is the formula? Interest equals to higher purchase price minus cash price. That means this is 20 lakhs, make it 20 lakhs. Then 20 lakhs minus 11,50,000. So interest equals to 8,50,000. Example number 2. cash price equals to 11,50,000, comma, interest equals to 8,50,000. Then what is the higher purchase price? What is the formula for higher purchase price? Cash price plus interest. What is the cash price? 11,50,000 plus 8,50,000. Therefore, 20 lakhs. So by the way, how you got this 14 lakhs in our previous 14 lakhs? How you got that 14 lakhs? 14 lakhs equals to 2 lakhs plus 3 lakhs plus 3 lakhs plus 3 lakhs. So what is the 14 lakhs is called? Higher purchase price. 2 lakhs is called? All these are called? So can I say total installment? That means again we got one more formula. Higher purchase price equals to down payment plus total. So the purpose of this class is fulfilled for me. So I have given you two beautiful formulas. One is about interest equals to higher purchase price minus. Second is about higher purchase price equals to down payment plus total installments. Yeah, please do copy up to here. Remaining we'll discuss in the next session.